Good morning, Quasar Markets Live. How is everybody ready for Fed Day? Steve and I both got the notice. We've got our red on. Steve, I got to do it. I got to show you the shirt that I wore today. And the Fed shirt.
Oh, that irritates me, as because I look. The Federal Reserve has a great position in what they do, and look, they keep the balance of the force in a lot of ways, right? So yeah, no, I don't, yeah, I don't believe in the Fed.
And neither do I. I just love it. It's one of those meme shirts that I got back during COVID when the printers were going burr. So I had to unveil it today for our boy, Mr. There. Market Shark, good day, FOMC day to you too, sir. Hope you're having a good one. So far, Steve, we have the 10-year heading pretty steady, 4.3. Not much movement as we get ready for Jerome Powell, our Fed Reserve Chairman, to speak. 2 o'clock numbers come out, 2:30 he will be on. You expected any fireworks, or do you think this is sort of just nothing?
I think what's going to happen is not the question of are we raising or lower. We're not going to raise or not going to lower. We're not going to do anything. He's going to stay forward. And okay, I understand that. But I think what's going to happen here is he's going to give us a little bit more info about what he wants to do in the future. And I think this is the time when we actually are going to look at this Fed and really scrutinize every single word that Powell says. And for me, Howard, I think what we're going to hear is we're leaving the door open for the future. I think they're going to say something to the fact of, look, the data is pointing in the right direction to cut, but we're not there yet. Now, to me, that's silly because I think that we're beyond that. We know that the Fed's always behind. They use data that's too old. All the things. This is not 1985 anymore. It's 2025, right? Get with the times. Get better data. Get better news. Get a Quasar Markets account. They need one over there. One, trust me.
They do need one for sure. So it would help them. Yeah, we've talked about what's going on overseas and how this stuff comes. Bank of Japan went last night. They held their interest rates, but they're in a different state. They've been raising interest rates.
Yeah.
But they did talk specifically, obviously, about the tariffs and what's going on there. And that was one of the reasons they gave for not raising, rates. So, that's, it's having effects. Tariffs are having effects across the globe when it comes to that. So, we'll see there. Also saw overnight European markets dipped as everyone's again waiting to hear what's going on with the Fed. Steve, we also had some issues. The Turkish lira plunged about 12% here. I know you had talked with Mr. Flanagan about maybe starting a position there. I'm going to pull up my charts. I actually still have that from the other
Erdogan, the Turkish president of Turkey, he has kidnapped the opposition leader who was running against him and threw him in jail.
By the way, it was the mayor of Istanbul, so it's not like it was
Constantinople, right? Look, let's be honest here. We can't live in a world like that, right? I will say this much, that dip is probably a buy now. That might be the worst thing I've ever seen. And if that's the case, and you can see the bounce this morning,
I still have absolutely a half pullback already because it was down over 12%, now only down about 6%.
Yeah, I haven't pulled the trigger yet. I'm still looking at it. There, what things can happen. Still, a lot of things can happen in Turkey right now. But it's a major port, right? I mean, it's a place where things get transferred, right? So
yeah, it still is. It's the gateway to the East and West,
right?
Without a doubt. I will point out that, the dollar is moving up a little bit, so we're getting a little bit of a resurgence. Still down really low at that 103.60 area. And that has gold, buddy. You've been all over it. Gold hit another record yesterday here. Not surprising there. You've been calling it. Peter Thomas, who we have on at 10:30 today, the man himself when it comes to everything in the metals, will be on to talk more about this. How high you think we go here?
3,500. I still think 3,500 is a number, and I still think 43 on silver. I don't think there's any stoppage here. This is nuts. I mean, all this money that's coming out. One thing that I heard, was reading about in the journal in a few places, was that companies are not, or they're selling their equities. They're not selling. They're not moving. They're not playing around here. They are literally selling their own selves as opposed to finding other ways of cutting.
Wow.
That's not normal, right? Now,
Right.
I know a lot of people have been calling me and asking me what I think about the future here. Should I be selling all of my stocks? No, absolutely not. I don't think so at all, right? I think this is a blip. I do think that there's a cut coming. I do think that the world, it's a blip, and I don't like it, right? I don't like what's going on. I don't like this uncertainty that's happening in the White House. I don't like this tariff talk, but things are still moving. It's just the nervousness of the, in my case, I'm not going to say retail. It's nervousness everywhere because you're seeing business inventory slipping a bit. I know they were up a little bit, but didn't meet expectations. And so instead of companies cutting everything else, they're just cutting back and they're cutting their own stock and selling their own stock. Now, some of this, and I've said this morning to a few people as well, a lot of this can also be tax selling.
Right.
That they could be selling to make some cash so that they can get to the next level. If that's the case, then yeah, I mean, we're good. But I don't think so. Look, there's a lot of good stuff going on. I think we're going to talk about NVIDIA this morning.
Yeah. Oh, yeah. We're going to get there in 1 second. I just wanted to, speaking of good stuff, I don't know if you saw the CEO of Bank of America, Mr. Moynihan, was on CNBC this morning. And,
Yeah.
Bank of America does 1 in 3 families in the U.S. have an account with Bank of America. I thought that was interesting. Didn't realize they had that big of a hold.
I'm 2/3 of that. I do not have an account at Bank of America.
Really, I do actually. So there's the U.S. consumer is showing a 6% spending increase so far in the first quarter of the year versus a year ago. Now it is down from fourth quarter, he said. And he pointed out that services and entertainment are where that is. So while airlines and stores are not seeing it as much, services, which I think maybe goes to your tax preparation and people getting ready early for tax season, which could be some of the sell-off here, and then entertainment that we've both talked about when it comes to cruises that we've seen the uptick in, and then Disney World, Disneyland, amusement parks, Hershey, all those places. So, and by the way, that represents $1.5 trillion that the consumers at Bank of America are going to spend through their debit or credit cards this quarter. So it's not a small number that they're getting this data from. And I thought it was very interesting because it goes against what we've sort of heard in a lot of the earnings reports, right?
All right. So I'm going to pull up a chart and I'm going to show you exactly what I've been saying. Share my screen here.
I have to stop mine. Hold on 1 second. There you go.
All right, and hopefully you can see that.
Yep.
This is consumer percent of a balance of 90 days delinquent. This means your credit card as a consumer and the delinquency rate, right? How many people are no longer paying their minimum balance to be able to keep their credit card? And this is over 3 months, 90 days, right? The last time that we saw this, I think you may be covering over the morning.
Oh, I apologize.
You're fine. You can see here that, and this was, look at that, 08, 09 in the crash, was 13.7%. That's right. 13.7% of consumers were literally delinquent over 90 days.
And he didn't mention, I was looking for him to hopefully say how much of this, what Jamie Dimon's been good about is telling us how much money, so to speak, people hold. Remember during COVID and when people were saying we're going into a recession, he said, no, we're not, because people have all-time high levels of savings right now. And then he recently in his last earnings report pointed out that people were at all-time lows or since like 2008, 2009. So I think it goes to exactly what you're saying there, Steve, without a doubt. Let's talk a little bit about NVIDIA. I'm going to pull up their chart here and get to the Mag 7 to start off with.
And as you do that, let's talk about that. I mean, Jamie Dimon's right. I have been pounding the table for 3 decades saying people need to save more, save more, save more. And they did during COVID. And I was very impressed. 25% savings rate during COVID. Normally it's around 5%. We're now down to 3% savings rate, right? I think that'll balance out a little bit. People spent all of their savings, spent all that COVID money. It's all gone. And yes, at that time they broke a few brokerages, but guess what? Wall Street always wins, and we're seeing that now. So,
Yep. So NVIDIA, like we talked about yesterday, dipped during their conference, their investor conference. I watched it. I thought that there was some great information in there. I thought the biggest takeaway for me with these, they're not just stopping with computer chips. They're going to be they want to be the major player when it comes to data centers, right?
I constantly barrage Apple for not innovating, right? And they're doing that now. They're starting to do that now. Jensen Huang came out there and probably gave one of the best speeches about the future. And I'm talking about a real future, that AI just isn't running our lives, but it's everything he's not just putting his chipset into a computer anymore. He's saying, I want to be in robots, in humanoid robots. I want to be in the robot that walks around your floor. I want to be in, and this was shocking to me. He's partnered with General Motors and for a self-driving car, right? Yeah. We don't just have Tesla anymore now. Tesla stock probably going to fall even more on that, right? That is incredible. The chipsets of the AI that are going to go onto your phone, the chipsets are going to go into your Blackwells for blade servers. We talked about that yesterday. He is really pushing the next envelope.
Oh, yes. I mean, they introduced their next generation platforms. I do have to say I felt better because I know we've had some streaming issues in the past. They actually had streaming issues in the middle of their conference, and it went out right in the middle at about the hour mark. So I don't feel so bad anymore because I had a laugh that they actually had some issues. But they announced their Rubin expected the second half of this year, 3.5 times the performance of the current Grace Blackwell system. So think about that. The ones that you and I are dying to get, this new Rubin is going to be 3.5 times basically more powerful. And then the real big one was the Rubin Ultra, 14.4 times the performance, 576 GPUs on one board.
When I saw the stock of NVIDIA fall because DeepSeek came out, right? Guess what's happening right now? NVIDIA is partnering with Google DeepMind and Disney Research to build a robot called Newton, right? Okay, I mean, this is not DeepSeek. This is way beyond all of that, right? They're behind the 8 ball, and NVIDIA is like, that's funny. Wait till you see what we have. This stock is so undervalued in my mind. I'm still long. I'm not gonna stop being long. I'm gonna stay long. This is just silly, and I'm gonna stay long big.
And I will say that on that news, they were given a 190 share by Benchmark. Analyst was the first analyst to sort of come out after that came out yesterday. Yeah. Some takeaways also there, obviously, that were huge with a partnership with Elon Musk and XAI, along with MGX, BlackRock, and Microsoft. So that has now been pushed up to $100 billion infrastructure deal. I do have a headline on it specifically here. Boom, there it is. Huge deal there. And he showed those. Some names I want to bring up for people that I haven't seen mentioned so far. Vertiv, VERTIV. If you watch, Steve, during the middle of the thing, I took a picture of it and posted it. They are one of the 2 partners and the only public one that is going to be building the HVAC cooling systems that go in these data centers. So keep an eye on that one. VRT personally is one. The reason I say that is as people are realizing which ones they're tied into, Micron was the big one that really has taken a huge move up here today, up double digits since the announcement yesterday. Now actually pretty flat in pre-market now, but they were the big winner because of the fact that they are going to be partnering with them for their new RTX 50s. So, it surged about 10.5% before the keynote, 2.7% after. So good to see that. They're looking to launch a $3,000 personal AI supercomputer. I have to assume you'll be one of the first people on that waiting list there, Steve.
I'm not sure that my office can handle any more heat in.
I was about to say, here in Ohio, I use it to keep myself warm, so my office is the most cozy in the house. I don't know how it goes down in in the Tampa area with you. Yeah,
The air conditioner is sitting next to the studio here. Yeah, look, things are going to get a lot. I think, pun intended, heated up right in this space. Netflix talked about this, right? That you'll be able to have your videos anywhere you want. And you're going to need to have these computers in your home, servers in your homes. We'll no longer just need a laptop or an iPad anymore. You're going to need a big bad boy to run your home, right? And I think this is what Micron's talking about. I think this is what Vertiv is talking about, right? That these chipsets are going to be needed for everything. And so this is not like, oh, I need a new NVIDIA chipset for my computer. It's going to be, I need a new NVIDIA chipset for my air conditioner, right? My whatever. And the AI is going to be integrated, and the Internet of Things, the IoT, will be integrated into everything. Your refrigerator will have an NVIDIA Micron chip.
It's called smart cities. There are 4 of them in the North America that are already being sort of worked on.
Yeah.
Dulles being one by where we are, outside of Dallas, Texas, another one, Minnesota, a 3rd location, Oregon, the 4th location in the U.S. Toronto also has one. The other thing, NVIDIA moves the needle on copper. Did you see that also he talked about that copper has a key role in the Rubin AI chips? It hit a 10-month high as demand surged, and one of your favorite, I know, miners, FCX, I've pulled up here. You can see the 6-day run that it's had here. It had bottomed out just around 34, now pushing the $40 level here. Are you buying? I mean, I love the way this W formation is looking on this daily chart.
I'm not. I in the past I have liked Freeport McMoran, but I think the problem with is that they have issues outside of just regular let's drill and build and dig. So I liked them in the past. I'm just not a big fan of them right now.
Okay. Sticking in the Mag 7, Tesla was the other one that's up tremendously today, up about 2.9%, although again that's against a backdrop of a 50% drop in the price over the last few months. But they did actually secure a permit for employee ride-hailing services in California. So you're going to start to see that. I also noticed, and I have to ask you if you think this is an inside move here. Cantor Fitzgerald upgraded Tesla and gave them a $425 price target. And we happen to know that their chairman is now the Secretary of Commerce.
No comment.
But again, good to see Tesla starting to move up here. I still have the feeling that it is coming back down to this 202.84 area before it actually sees a stronger recovery, because I do think news of that would normally have moved it up much more than the 2.97% we've seen so far. Steve, big mover today had been Stone Company Limited Ltd, up about 10% here after their earnings report here. They had a nice little beat on both EPS and on top line revenue, up about 15% from where the street was expecting, with 36-cent revenue on EPS. And then they came in at 582 top line revenue. Not really much more on that. Just again, they're one of the big movers today, so I did want to bring it up. I'm not that familiar with Stone Company.
Yeah, they're a good company, regional bank. Look, I think that the M&A in the banking industry is going to be really big in the next few years. Maybe not so much now, as banks have to upgrade to the digital side things. But I've said this a million times. Banks got to upgrade and got to get with the times, or they're going to be. Yeah.
Absolutely. Tick is a little bit negative here. We are about 10 minutes away from the cash markets opening. Pretty neutral. Advanced decline nicely at 1357. It's still in that sort of area, though, that it could, at open, that could change right down to 0. We are seeing the Qs up, pretty similar to what we saw yesterday morning, though, up about that 30 basis points before it started pulling back there. Same thing, SPY up about 18 basis points here. Nice jump up by Bitcoin overnight, back to 84,265 here. It did have some interesting notes here, Steve. So a new report came out that does talks about crypto domination, or where crypto has the most adoption, is what I would call it. UAE is now the #1 ranked country that is crypto obsessed. They have an adoption growth at 210% this year, and 1/4 of all citizens in the UAE now own crypto, highest globally. So again, this is based upon ownership rates, search activity per capita, and number of Bitcoin ATMs. Second place, Singapore, usually #1, quite frankly, so they drop down. And then #3, the US, with a $220 growth and adoption rate. So nice move up here, there. And then on top of that, we got our girl Kathy Woods was back out here predicting $1.5 million on Bitcoin by 2030. She said that on-chain analytics indicate Bitcoin is mid-cycle in a 4-year pattern. Institutional adoption will drive Bitcoin demand, improving portfolio risk returns, and that the deregulation trend in the U.S. could accelerate institution involvement. She also pointed to economic stress and possible Fed rate cuts that could further fuel Bitcoin's price appreciation. So you buying Kathy Wood's call there for that?
Kathy Woods thinks everything she buys is going to go to the moon. Let's be honest. We've known this for a long time. I'm still saying it. Bitcoin goes to 250. I mean, I don't think there's anything, nothing's changing here, right? There's been some sellers, and there's been some people that are trying to short it, like North Korean hackers. Okay.
Yeah.
Howard, you and I have been in the Bitcoin business since the beginning, right? I mean, $75 was my first Bitcoin. So let me just say this. I think you and I have seen everything that they can throw the kitchen sink at it, right? And it still survives. Yeah, I mean, she's right. You know, if every multi-millionaire in the planet bought one Bitcoin,
they can't.
There's not enough Bitcoin to go around.
Not every millionaire in the U.S. alone is that. I mean, right. I still remember that was the first number that hit me, that made me a Bitcoin maxi, so to speak, was that number alone. Is that I know what scarcity is. I know what millionaires all like to brag and show their stuff, and that's going to at some point be a badge of honor to say I have a Bitcoin. Because again, it doesn't change. I will point out too on the chart here, if it does break out of this ascending triangle today, we could see an explosive move. Looked like it wanted to make it yesterday before retracing. So let's see what we can get here. It's right about at the key resistance. I have 84,360 in that area as the key resistance today. So we'll keep it up. Also good to see Ethereum back over 2,000. I will point out that the hacker did move all that Bitcoin that he made on that short to Ethereum. So we'll see what happens there. Gold's holding up over 3,000 now, Steve. I think that's the most bullish thing that I've seen in a while. The fact that it's been able to hold above the 3,000 level here. So gold continuing to move up in preparation for your big talk with Peter Thomas here at 10:30. And then if I look at the Spider Select so far, we have a mixed bag. We have energy down a little bit, and technology.
We're hearing reports now that Finland's President Stubb just got off the phone with Senator Lindsey Graham, who will ask the U.S. Senate to increase sanctions on Russia if they do not approve the ceasefire. Okay. That will definitely that'll definitely cause some selling here a little bit.
Yep, I would assume. I mean, I will mention that also does not look like it took a turn for the worse yesterday, not for the better. We know that, President had a long talk with Putin, and, a lot of expectations. You could even hear it out of the president's voice when he spoke about it, were that they were going to be able to move that forward, and Putin came back to the table and sort of came with more demands. So we'll see what happens.
Zelensky was right. You can't trust the guy,
Yeah. I mean, again, I think everyone showed the stripes that we've known they would in this sort of discussion. But it definitely has definitely has markets a little bit worried, without a doubt. It's probably weighing more in the markets today than even the Fed is. Steve, I do want to point out some other good news. We'll get back to a little bit into good news. Signet Jewelers. I wasn't expecting this one. They had a great earnings report today, up over 16, almost 17% now here.
Well, when you don't put cash in the bank, you don't put cash in the stocks, you put cash into jewelry. I think that's, it just doesn't surprise me at all, actually.
Whoa, our boy, Mr. Flanagan, Stephen Flanagan saying it's time to fish or cut bait with Russia. So there you go. We'll get more out of him in about a half hour here. So I'll be excited to hear what he has to say about it at that point too. Yeah, and the other part is, you've talked about this, what Signet showed, and why I see this as an actual bottoming out trend here at this downward level, and maybe they can start to try to close this gap up, is that they have made a big move into e-commerce and they're seeing it pay off. Again, we've talked about a brick and mortars can't be the key to what you're doing. And their CEO, I don't want to misquote here, so I'm just trying to find my thing. Store optimization is what the CEO talked about. Company plans to transition over 10% of its mall-based locations to off-mall sites and enhance its e-commerce channel over the next 3 years, aiming for better real estate allocation. Those that don't know, Signet is the parent company of Kay Jewelers, Jared Jewelers, and Blue Nile. So, a big player when it comes to the world of gold and diamonds.
Yeah, and I like Blue Nile. I think they have a great website. I'm not in the market to buy any jewelry, so I don't really understand, not there. So I can tell you that people are spending that money at other places. They're no longer spending it on experiences. They're not going to, well, we know that for a fact, right? Alcohol is way down. Restaurants are way down. So now they're going to put it into jewelry. We've seen that, right? We've seen some of the consumer discretionary, let's say like shoes and clothing, I've taken a hit. I will say they're looking at quality stuff. Now, we've talked about this in the past, that the money is moving into quality stuff. The rich are still rich, so they're going to still buy things, right? They're going to buy jewelry. So nothing's changed right there. I will say that in the clothing business, people are buying nicer shoes. They're buying their quality Nike shoes. They're buying, but when I looked at the other day at Coach and those companies like that, they're all getting eaten up by these Simon Malls, SPG. And so, some of these finer clothing and finer accoutrements to your clothing isn't happening right now, right? So, where is this money going to? And we don't know. It's not going into Bitcoin at 84,000. Is it going, where is the money going to?
Well, gold for one. I mean, we do know that gold and metals are definitely one of them.
And I think
it's grown in money markets too, right? We know that, treasury bonds and those things have had good appetite also.
Right. And if you can't find gold, guess where you find it at? In the jewelry store, right? Yeah. And they've got gold to sell. Costco sold out of their jewelry or out of their gold nuggets. So guess what? You got to go to the jewelry store to get it. So yeah, I don't like chasing metal. Chasing metal is usually bad, right? It usually ends up the wrong way and you end up stuck with it. Now, people ask me all the time, how do I know when the top is in gold? I'll tell you the exact same thing. Everybody knows the answer if you've been listening to me. Watch your TV, watch CNBC, watch Bloomberg. When they start seeing gold commercials, they're trying to dump their gold onto you. So be careful out there.
We are about 1 minute away here from the cash open. Alex, hello. Thank you for joining us here on X. Any questions you have for us, let us know for sure. We try to answer them. We are getting ready to open. Steve, you think it's going to be a pretty mild day going into the
very, very mild all the way to, and we already know what's going to happen. And we also know that when we saw an upset yesterday, Alabama State, right? So it's March Madness. It's a lot of things going on. I would not be trading this morning. I'm not trading this morning, by the way. I'm still long NVIDIA. Everybody knows that. And I think NVIDIA is looking pretty good this morning. 117.42. We should get back above that handle again. 119 yesterday was a high. I think we'll get above that today, and then maybe going back on in the 120s. So I'm not too concerned. It looks like, here we go. We're about to start here, and about 1 minute here.
1 minute to the open. Tick was fairly neutral here as we got into the open. Advanced decline has dropped about 250 here to 1257. QQQ, though, has picked up a little bit of steam, almost up half of a percentage point, SPY up 25 basis points so far as we get ready to open. Bitcoin did lose the 84K handle here. So again, that 84,350 area to me is going to be key resistance to sort of watch today.
Yeah. This morning I made a post on our, if you guys aren't out there and you want to hit us up. We're on Quasar Markets on x.com, right? Just Quasar Markets. I asked, are you bullish or bearish? And we had quite a few responses already. And I think it was like 65 to 70% were bullish.
Well, that's great to hear. And Lucky Charts, thank you for joining us. I love it that you love watching us in the mornings. Thank you so much. We love being here, and we are open, everybody. Here we go. Let's, as you know, I like to have the cues on to watch here at the open. First tick to the downside, but again, nicely above VWAP so far. So short-term look is bullish so far. First moves are to the upside here. 477.
NVIDIA pumping here a little bit. 117.30 now.
Yeah, NVIDIA up 1.63%.
Boeing's up 2.6% right now.
Tesla just broke above 230 here, 231 now. So moving to the upside. Mag 7 looking pretty good overall. Apple up 0.7 of a percentage point, moving to the upside. NVIDIA, Steve, trying to move above 118 here. So you mentioned 119.02 was the high yesterday that we got to watch for. Yeah. If we can get above that today, again, like you said, I do think you see a nice quick move.
I think we do. I think NVIDIA, look, that stuff yesterday with Jensen Huang was amazing. So he really is talking about the future.
Yeah, I mean, without a doubt, and pointing out all of the ways that they are looking. They're not just building chips; they're building the future. Without a doubt, I definitely took that away.
There's 118.
It's interesting too because I do think that he is becoming, bigger and bigger and more important when it comes to these things.
Yeah, I mean, he's got that thinking like he's when you look at Zuckerberg, I'm going to go into metaverse. I'm going to go into AI before anybody else. And the stock was at, around $99 a share today. What's it at now? So, you got to have that person that's running the reins and holding on to it and saying, here we go. I think we go to 119.02 today. I think we break yesterday's high, and I think we go on.
Broke 118 already. So nice move to the upside so far. Tick is negative. I will point out advanced decline dropping. So far the Mag 7 is holding us up. Let's see if it can continue to do it. We are seeing a little bit of a slippage here across Meta. Tesla now at 232. So Tesla's the runner. It's getting a little bit of a squeeze here. I think some people were fading the Musk. I said yesterday that I almost believed in fading the Musk. I guess I was wrong. Don't fade the Musk is still intact here today. Let's see what it does here. It just broke VWAP. So you definitely have more short-term momentum here than you did. Looking at the losers so far, the laggards on the day, HQY seems to be the biggest laggard, down 16. Health Equity, I did have some news on them. That's this one. And they did. So HQY, which is Health Equity, anticipates a fiscal 2026 adjusted earnings that were lower than expected, below the midpoint of analyst expectations. And they are down about 14% now, 16% since that news. So continuing to slide to the downside. The other one sliding to the downside again, GDS Holdings. We know that this one has been in sort of a downfall here since the end of February, continuing to move to the downside again. Mag 7. So NVIDIA sort of topping out here, but all of them are in the green so far.
Yeah, I'm not too concerned about it. I think it's just a little bit of profit taking up there, but I think it blows over yesterday's tops, and we go back up. And the advanced decline might positive by 11.54. So yeah.
King Dollar moving back a little bit here. STNE again, Stone Holdings Regional Bank up about 12.86, so it's giving back some of that early morning momentum.
There goes the tick, up 162. So, yeah.
Signet holding up pretty well here, still up 19%. So that one is holding up pretty well.
Silver and gold are slipping here a little bit.
Yep, a little bit of a sell-off on gold here, not too bad. A little bit on silver. Take a look here. Seeing Chinese stocks, a mixed bag today. Baba up about 1%. Baidu down 2.62%. See what JD is doing here. JD pretty flat on the day. Palantir up 1.67, above 85 here today. So Palantir making a nice move back up. was below 75 a few days ago, so it
So
is
we're
moving
hearing
up.
right now Steve Witkoff, that's the White House envoy to the Middle East, says Russian President Putin gave a direct order to not attack any Ukrainian energy infrastructure targets after his phone call with President Trump, and is acting in good faith. That's a new thing. He's saying that that Trump is acting in good faith. So okay.
Yeah, we can hope. Seeing banks get hit pretty hard here today, Steve. Bank of America down 70 basis points here. Wells Fargo down. Morgan Stanley down 1.2%. Goldman Sachs down about 80. The outliers there, JP Morgan is up about 22 basis points. There, the other ones are international banks that are up in general. Otherwise, take a look at the chip sector here. NVIDIA now down below 117 again. So again, there just seems to be a sell-off on any kind of move to the upside, Steve. I think similar to what we were seeing in Bitcoin, we're seeing in NVIDIA, the short-term buyers that keep buying these dips are
They're
selling.
just scared. They're just
Yep.
money, and I love scared money. I make money off scared money people. So I'm not scared. I think we go right back on up, and I'm not too scared about this. Right? If this is the worst that the market can do with all the bad news out here, there's only one direction, and I think Tom Lee is right. Right? He's the one who called Bitcoin at 20,000 to go to 100,000. He was right, and people were laughing at him. He's saying the same thing, right? This is a good time to buy, and I'm not telling we don't tell anybody to buy or sell, but I like this. I like buying things that are on sale, and I don't know why people have a problem with buying things on sale. I do, because they don't know what to do. It's too short term for them, right?
VIX is coming down here going into the FOMC. That's good to see. We don't normally see that, but it is coming down here to 21.55. Was above 22 earlier in the pre-market trading. Dow Jones is up 33 basis points so far, and a nice move up in the cash market hours. SPY up 26 basis point, which is slightly down as we've been open here in the cash market. And Q's is the one that's getting hit a little bit. It was up almost 70 basis points, now up about 40 basis points here, back below 477. So that's the one to keep an eye on. As Steve mentioned, gold looks like it's pulling back towards that 3,025 level. Bitcoin now almost back at 83.50 here, so a little bit of a sell-off there. WTI back up at 66.50. This is following too. Putin said that he wouldn't attack energy. We had seen oil sort of moving down on that news. It is moving back up slightly here this morning. Let's take a look and see what is moving the most here. Give me 1 second to change my screener over from the pre and post market to the cash market.
I do like the fact that light sweet crude futures are holding here. You know, we're at 66.61 now. Had a rough time getting below that 65 handle, so it didn't do it. And, you know, anything below that would be recession talk. And, you know, in the 60s, we'd see recession talk, but we're not seeing that. So I'm okay with this. I think people need to look at more of the bigger picture than just, oh, NVIDIA stock, or, oh, this stock, or, oh, that stock. Look at the bigger picture. They'll give you the direct answer. I mean, we're seeing that, right? So I'm not too concerned about this. I think the selling a little bit this morning is, oh, nervous Nellies out there. And I love those people. I just buy off of them. I'm a ticker taker, right? So, and that's what I've been doing. I'm not playing today. I don't need to. I got my positions that I'm happy with, and I'm okay with this. There's nothing in here that's scaring me.
Yep, it's just a little bit of an uneven market, tick back negative again here, and we do see most of the indices moving back towards neutral so far. Bitcoin picked up a little bit from that 83,500 level to 83,750. Gold is holding up nicely above that 30.25. Early morning movers that are still moving up, not really. Most of them have capped out here. It does look like Kingsoft Cloud has moved up a little bit here in the cash market. Yeah, slightly, nothing too great there. Signet is back up over 20%, so that seems to be the early morning winner. On the laggards this morning, moving to the downside, like I said, HQY, which is Health Equity. They are moving down 17% after an earnings miss there. I will say ESLT, which is the Israeli tech and defense company, is pulling back a little bit today, 3.59% after the big run up yesterday, as you know, Israel increased bombings on Hamas. So
maybe a good time to talk about it, Howard. We have, and I want to show this I can. I'm going to share my
Yep,
screen.
let me stop my screen for you.
Yeah, but we have a newsletter here, and I'm inviting everybody to do this. I'm going to share my screen. Hopefully you can see that. We have an AI newsletter that you can sign up for. What does that mean? Well, that means that, look at this. I mean, there's a social media, the top movers for today. We already know this. We talked about the Qs, and Intel was a big mover this morning, and NVDA. Our newsletter is completely AI, meaning that it knows what I'm looking at and knows what I'm thinking about, and things that this machine gives you the better news, and not just what the newsletter wants you to see. And it's not pumping you with crazy info, but we also have sports. We're going to have weather in it. You can also see all the videos that we have too as well. So if you're looking to up your newsletter world here, I think this is a good place to do that. And I'm going to show, if you go to our website, Howard, if you can, go to our website and share that screen and show them where they can sign up. At the very bottom of the website, you can sign up, subscribe, and get the newsletter for free. We don't charge for the newsletter. We're not that kind of company. And you can be able to see all the things that we're doing. And all the videos that we have, you can see right from the newsletter. So if you want to, you can subscribe to that. Go right to the website, quasarmarkets.com, right to the bottom, and it'll say a little button and say, hey, subscribe here. You can also unsubscribe to if you don't like it after a while. I don't know. Probably gonna love it. I know I love it. Trust me, we worked very hard on it to get you the best newsletter that we can possibly get you, where it's not pumping you with, hey, buy this stock and crazy stuff. This is what so and so is saying. We're giving you the actual news and AI'd it. So sign up, get yourself a better newsletter AI.
Absolutely. Again, I will point out you should log in and sign up for Quasar Markets as it is. We do have a free membership that you sign up for, free access to the platform. My screen is not going to look exactly like yours is, but as you'll see, it is a very vast amount of information here. Give me 1 second to move that.
I still think NVIDIA makes breaks yesterday's high. This selling is still you can see it now. 0 DTEs trying to make it win a buck here, and they're going to lose thousands of bucks on their win. So I'm kind of liking this. I'm thinking about buying some more down here actually.
Yeah, the only thing is I point out on our Quasar Markets, and this is my widget list for Quasars. A lot of red here on the chart so far on the heat maps, just so people know what I keep in front of me here on a daily basis and why I love our platform so much is right here on one screen. I have the heat map for what's going on in all the currencies, all of the stocks, and then all of the ETFs right in one place. I have my market movers so I can see that LSE right now is the biggest move to the upside, the gainer up 69.06%. I've got my Twitter news loaded right in here so I can click right to any of those. If I come down a little bit further, we got stock twits here with a lovely picture of Jerome Powell locked in there. But our Quasar institutional news here gives you everything. Look at this unusual action on options right there for you. What's happening in with Plug Power today. Just so many different ones here. I do have a couple of other comments have come in, Steve, for us. Maybe you could answer a little bit on this. Looking at actives, quantum computing stocks, heard that Intel might need one of them. That's Paul Frederick. Paul, I'm not sure because you did put INTL. I'm assuming that is Intel you're talking about there. And we do know the new CEO there has been sort of the big news that we've seen across Intel that's moving it. And then lastly, we have Mr. Flanagan coming on and saying, keep your powder dry so you can take advantage of price action post-Fed. Expect no rate change, but there are comments that are hawkish or dovish, and that's what derives the next move. Again, Stephen Flanagan with 40 years of experience over at JP Morgan knows what he's talking about when it comes to this. And again, just showing you what else I have here. I have sports on my Quasar Market so I can get that. Saturn news, Pluto news. All of the economic data that's going to come out today, I have right here around the world, not just the U.S. information. So again, this is all part of Quasar Markets. Again, if I want to just look at just news, I have a lovely screen that I have set up. I can go back and forth, and this one keeps my stock twits TV, which I'm going to shut off so it doesn't do that. There we go. I got TV, I've got Twitter news, the Quasar news, Google Trends right here. Everything you want to know out of Google Trends, you can click and get into. I have my top stories of the day, and then I keep one ready to go once I go use my news data. Now I want to see what's going on. You can see I was looking at one of my favorite stocks, MSTR. I've got right here their order flow. I've got all the news that's going on MicroStrategy that comes across here. I keep a stock screener going at all times on here. I've also got the option chain for Apple I was looking at earlier this morning that Steve built this himself. An amazing option chain here. And then I can go right into the fundamentals of any of the stocks. So again, all of this on one screen. I used to need to keep 10, 12 screens going at all times.
I'm watching CNBC, Howard, and Jensen Huang, NVIDIA's CEO, is behind Jim Cramer right now, stalking him.
Oh, yeah. He shows up at CNBC almost every time he does something big. I love that he does that.
And we're back above 84,000 again on Bitcoin. That's what I'm saying. I'm not scared about this market. This thing we're going to go right back up. Forget about the sellers right now. If you're shorting right now, you're on the wrong side of this, because you should have done that 3 weeks ago, right? Shorts are just trying to catch. They're trying to play that FOMO. As I always say, the market's about one thing: the path of least resistance, and the least resistance is not to the downside. We've already had that flush out. It's now to the upside. So yeah, I like this now. I like this buying here. I'm okay with it.
Just taking a look here at what's most active by volume so far this morning. Most active by value, we can see NVIDIA right now. It's got 24.3 million shares traded here. Back down at 116.06 though. Tesla has 12.1 million shares. Microsoft 2.3. I like to see if anything pops out here that I wouldn't expect to be in here. Not really. They're most of the big boys: Berkshire, Palantir, Netflix, Apple. So I'm not seeing anything there that sort of gets me off. Like I said, it says Trump's phone call with Putin was a win for the Kremlin and leaves Ukraine little choice but to trust in U.S. good intentions, coming out of Bloomberg there. So again, I don't have to go off of this one screen to get all I need. I've got my ticker with the things I like to keep an eye on. As Mr. Flanagan always tells me, I have my euro to USD, my Bitcoin price, Ethereum, S&P 500, NASDAQ 100. All of this right here in an easy fashion to be able to use. So again, that is the Quasar Market platform and some of the ways that I use it here.
Yeah.
I'm going to go back here to my screens just so I can look at the watch lists here. NVIDIA up about 1%. We do see all of the Mag 7 is in the green now, so we are seeing some nice.
Yeah. Look at that tick jumping now. Up 200.
Yeah. Advanced decline back up to 1500 here. We do see the Qs regain the 476.50 and trying to hold up there. They're up 41 basis points. SPY up 35 basis points so far. VIX down to 21.38. I will say I'm going to keep a close eye. You keeping a close eye on the VIX today, Steve, to give you a little bit of a heads up of what's going on as the Fed starts to speak?
Yeah, I mean, look, last week we all know that I shorted the VIX when it was over 25. I thought that was just silly. That's what I mean. Like, people are getting weird about this market right now. They're just completely lost, and that's why we're here to keep you from being lost. I'm not. I'm pretty. I know what's going on here, right? I know that there's tax selling. I know that the Fed's bothering people. I know that the boomers are worried about their money. None of that bothers me right now. If you sell now, you're just being silly right now. I think Tom Lee's right. I think we go straight back up.
I will point out, if you're looking at my heat maps here across the screen, they were all very red just 5 minutes ago when I first opened this up, right? We can see that they've moved to very neutral to green here. You can see NVIDIA. I will point out the nice thing here again. I don't have to leave my screen. If I want to find out more about what's going on, I can click on the actual screen. Takes me right to TradingView, one of our partners, takes me right to their stock, and I can see everything going on in NVIDIA here. It gives you their chart, where they are over the last day, 5 days, month, everything right here that you need right out of the Quasar Market, website and our platform. So again, can't say it enough. You really do want to get there. Take a look around, sign up for the free membership. and get yourself on the platform because it makes your trading more effective. It makes you a more effective trader, I should say.
Yeah, that VIX just took a big dump. You know,
Yep.
that was a flush in a lot of ways. Yeah.
Yep. VIX back down 1.75% here. So we are seeing a move, back to the levels we'd like to see it hit below that 20, and you really be flying on the markets. Gold holding up nicely above that 30.25 area. Bitcoin back right above 84. So again, that quick sell-off has been, bought back right up. Okay.
Yeah, I'm keeping my eye here on the tick. Still up 286. So there's literally nothing here. 84.2 now on Bitcoin. I mean, this thing is, yeah.
And again, things up the most so far. Stone Company, STNE, we talked about. Here's one that I don't know much about. Ollie's Bargain Outlet Holdings.
Ollie's Bargains. You don't have look. It's another one there. Dollar General, right? Ollie's Bargain Outlets. One of those situations. Look. It's people are going to go if the world's tough. Then that's what they're going to do. They're going to end up. Yeah, I'm not bothering me at all.
Steve, I'm getting a tornado warning here out of my. That's what that siren is. So if you hear that behind me, that's a little concerning. That's actually
welcome to my world on a daily basis lately.
Tornado warning siren going off at the fire station down the street. Other things that are up in here, hopefully not my house. Roku is up 6.71% this morning. Boeing that Steve talked about, I apologize. That is going to come in here a little bit, Steve. Boeing company up 6% this morning. Affirm up 4.9 after the big beating it took yesterday. Again, we know that was because they lost the Walmart account. Klarna took that over. They were down tremendously here, but regaining most of that already today. So little nice move up by Affirm. See what else do we got going on here. Tick slightly negative, but pretty neutral so far. I did notice restaurants were a pretty mixed bag today, Steve. We're seeing McDonald's up, Chipotle up, QSR. So some of the fast food companies are up today. Same thing, Brinker Company, which is Eat, up 1.24%. Wingstop, the big winner, which makes sense, right? We're in March Madness. Everybody goes out and gets their wings. So Wingstop up 2.26%. And Steve's favorite, Cheesecake Factory, up 1.84%. So, seeing some nice moves here by the restaurant. Let's take a look at healthcare on the other side of that. Healthcare, which was the only sector that was up when we left the air yesterday, is a sector that's down today. We see Elevance down 1.78%, Satine down 85 basis points, Baxter down 90 basis points. So that is the laggard so far. And you can see that when we look across the Spider Select here, 9 of the 11 to the upside, 2 to the downside, the XLP, which is consumer staples, and XLV, which is the healthcare sector I was just looking at.
You heard from Steve Flanagan the other day talking about dollar Dixie now 103.68, pushing back up again.
Yeah, it is pushing up slightly here off those lows. So we will have Mr. Flanagan in about 5 minutes to give us an update about everything going on across the currency platform. That gas is holding up still at 417 here today. Steve got a little bit of a push up. I did see on the LNG side, that was one of the companies that I was looking at here this morning. Sorry. Intel now down 5.15% here this morning.
And we're now at NVIDIA back to 117. I mean, I'm not scared of this. It's just silly. It's silly people that are trying to push around, and they're going to get. I feel bad for them because they're going to get burnt here pretty soon. I think within the next few days or weeks, we're going to see a real push back into the market. There's so much cash, and it's not going to take much. It's going to take Ukraine and Russia or just one good news piece, and bam, it's going to be like straight up again. And I don't. Yeah, look at that. Look at the VIX dropping once again.
Yep.
1733.
Yeah, VIX down to 2116, looking to break below the 20. There it goes, 2107. Continue to move to the downside. As the markets continue to move to the upside, we see the tick still staying positive. Advanced decline, trying to get up above the 2000 level here. Dow Jones now up 54 basis points. SPY up 57 basis points. Q's right back where we started the cash market, up 70 basis points. So volatility slowing down here, and we're now getting back up to where we sort of started the day. And let's see what we do here.
We're about to hear from NVIDIA CEO on CNBC. So I just saw that they are gonna bring him on to talk. So
yeah, I think if he's in the building, they're gonna want to hear from him. That's for
84.3 now. I think it's at 85,000 here pretty soon. I think there could be a breakout here on Bitcoin here.
Yeah, again, 84,350 is that area I'm looking at. If it break above that 84,350, and you do have a lot of room to the upside here, so you get to about 89. So you do have a nice little move to the upside if you can break above and hold above that 84,365 area, is what I'm seeing so far. VIX struggling to get below 21, staying right at that 2108 here so far, but that's been the support so far. Let's see what else we're getting. Amazon, Mag 7, again, all 7 now to the upside, all in the green. Apple, the big winner so far of 2.16%. Tesla right back at that 230 level. It was challenging 235. It hit 234.13 earlier today. So that one is trying to push back down a little bit here. NVIDIA, on the other hand, back above 117. We did break 118 earlier. So we are trying to move back to the upside. You can see a nice explosive move through the VWAP. Sort of staying right around, though, like you said, the linear regression on the 1-minute chart seems to be holding it intact right now.
Yep.
That's a pretty sideways linear regression. Not much of an upward movement one way or the other here. So we want to see a break through those bottom blue or top blue lines here if we're going to see an explosive move one way or the other.
Yeah, I mean, we're obviously 10 o'clock data now coming out will be oil numbers, and I'm very interested in seeing what those oil numbers are.
We did get housing numbers. It's basically backed up what we had seen yesterday, right, Steve? They were just lower. There was an increase in housing starts, but that's very deceiving because they were down 29% last month. So the increase is basically based against a very poor month prior. Still trouble when it comes to the housing, although I did notice that Pulte and PHM, right? Pulte Group was up earlier. Let's see if they still are here.
I'm looking at if you can show everybody how to do it. 2103 now in the VIX. I think we go higher here a little bit. But if you show everybody here how to use the system here, how to add the economic calendar to their system.
To Quasar?
Yeah.
Yep, you got it.
2102 now on the VIX. We're about to fall apart here. It's, that VIX falls down there a little bit. We could pump here.
I'm going to do it on this screen just because I don't want to play with my regular screen.
Man, we have so many different things to put in here. I just had a nice chat with Nasdaq.
Again, you saw how I have my screen with all that other stuff on it. To add something to it, you just hit add the widget that you want in there. You know, whatever you'd like, whether you want news, whether you want rocket launchers, market movers, Google Trends, eFast reports, you could put right in here. And it's that quick to move them around.
Yeah, it's under Trading View and under Economic Calendar. You can put it right in the system.
Yeah, I use the alpha capture as opposed to theirs.
$21.04 there on the VIX. Let's see it slip a little bit more. And I feel kind of dumb because I was short the VIX the other day. I might have pulled off my VIX puts a little too soon, but there you go. Yeah, you can put anything you want. You can look all the whole world. You can see whatever. 2103. The VIX needs to drop here.
I mentioned we don't even just have one way to find that. I use Alpha Capture at the bottom of mine to get all that information also.
Nice. There you go. Yeah.
That's why I was confused when you were asking which one. I was like, I already
Yeah, we got tons of. Look at that. Look at that VIX drop. Look at that 2104. One more little drop there in the VIX, and this market could just jump. Dollar yen's over the 150 handle here. Whew. I remember.
Yeah, well, we'll talk with Mr. Flanagan in a few seconds about that. As we know, Bank of Japan did not move their rates; they kept them at the current rate. And they're a little bit differently. Whereas we need to cut, they were looking to rise. And they did keep it. And I do see Mr. Flanagan in the house, so let's bring him in. Go to this screen.
The SEC will drop its appeal against Ripple, according to Ripple's CEO post on X. So there you go.
Yeah.
Good morning, Mr. Stephen
Flanagan. How you doing today?
Good morning, guys. Boy, oh boy, this is like such a great market. Just got to get the Fed out of the way here because I have so many trades wanting to make here, but are they going to be dovish or are they going to be hawkish? This is a real decisive point here. And, I don't want to jump into trading until I know what they're going to say.
Yeah, and again, I'm going to point out to our viewers, you have two 40-year veterans here that are both saying the same thing. They're not trading. Maybe you might want to hold off yourself here until we get some more.
VIX now at 21. Steve, look, it's very simple to me. That Howard asked me this morning what I thought about the Fed. I said, look, they're not going to raise or lower. It's not about that. We know we're going to stay the course. Nothing's going to happen. But we know that when Powell comes out, he's going to give a speech. I think you're going to have AIs running all over that speech in real time, figuring out what is he saying differently. But to me, I think it's going to be about the questions that are going to be posed to him from Steve Leisman's of the world, CNBC, or from Bloomberg or Wall Street Journal, Tim Rose. What is it that you need to see in order to lower or raise rates? And am I right or wrong on that? And VIX just dropped below 21 here.
No, Steve, I think you're bang on because, they're going to come at him in the sense that the Trump policies are creating global unrest, in the financial markets. And so they're going to, they want to know what is it that you're looking at right now? And he's got a tough position. Honestly, my view would be, give a 0.25% cut because the world is basically telling me that rates need to come lower. Looking around at the landscape, but they're not going to do that. They're going to.
Why are they not listening to us, Steve? Tell me exactly why. Why is the Fed just not doing it?
Because they're going to do just like Christine Lagarde, and tomorrow we're going to hear it from the Bank of England. They're going to wait for the models that they run to tell them so that they have something to defend themselves by. Right?
But those models are older than dirt themselves. I mean, okay. So,
and are they going to go out there on the gangplank and say, I'm cutting rates because of this reason, and this is the way I see? No, that's not what these unelected, or whatever we want to call them, the bureaucrats, that's not what they do.
I had to come back in for that. I was letting you two go at it, but I have to come in for that. There you go. Give it to him, Steve.
I love this, and he's right. Steve, you're right, and I don't understand why the Fed is not doing. They're just not paying attention. What, we're going to continue to use dot plot? We're going to use these old metrics that Jolt's numbers. What is it that the Fed needs to upgrade their technology? I mean, Musk is happy to go in there with his Doge team, right?
Boy, oh boy, yeah. I mean, what they need is a little bit of forward. What happened to forward guidance?
Yes,
right. We had that for. 20 years.
25 years, right?
Yeah, the Fed was always trying to tell you, okay, looking ahead, we see a little bit of a cloudy condition, but there is none of that. Everything is a look back. Inflation last month was look, here's what we know. And tomorrow it's going to be, Steve, just what we're saying. Bank of England will hold rates at 4.5%, no doubt, and that they're going to say our models are showing inflation to increase by Q3 to 3.7%. Their GDP is zero. In the fourth quarter, it was minus 0.1. They are hoping to have plus 0.1 in Q1. But fear not, everyone, because our models at the Bank of England are forecasting a return to 2% inflation by the end of 2027.
Yeah,
How foolish is this, right? I mean, okay, so we're going to wait 2 years before with no growth. It's just ridiculous that our central banks have become so entrenched. Is it because they missed the move up in inflation by calling it transitory? Maybe they're just gun shy now. Maybe
well,
that's
I was gonna say is it cover your butt. That's what it seems like to me is, it's very easy to explain things or to explain them off in the past sense, as opposed to make an actual, it's like the weatherman. Here in Ohio, they tell you what happened yesterday. They don't tell us what's coming tomorrow because no one knows.
Yeah. I mean, Steve, let's keep it. Let's take this. Let's get a scorecard out of how many questions to Powell have tariff in them. I'm going to say
I don't think you have to worry about that. I think it's going to be every single one of them.
Yeah. I was going to say I'm 6 bid. So
Yeah,
the bid
it would
six?
make a
Okay,
good drink. It would make a good drinking game, wouldn't it? Every time that someone mentions the word tariff, you got to drink. It would make.
But you have to look at it from Powell's perspective. Okay, he's right.
Yes.
They are now dealing with a new president and a new administration that is a little wonky. And with the Fed being that wonky, they have to think about how these tariffs are going to affect global trade, right? And that is going to affect inflation. It is going to affect all the things that Powell has been talking about. And they really don't know what's going to happen. Is a tariff going to happen? Is a tariff's not going to happen? Is it every single day? So I have to defend Powell in the aspect of it is a little tough place to be in. He's probably going to sweat a little bit in that suit with these questions of tariff, right?
Yes, but you're doing just what you and I would expect. Forward thinking.
Right.
So I'm going to take him at his word that he's a data dependent guy looking behind. And to me, there's every reason in the world for him to be at the bare minimum. He should be dovish in his comments.
Okay, so we've seen this. Let's take a history lesson, and you and I've been there that long enough. You remember when those intra-meeting cuts happened and those intra-meeting pops happened?
Sure do, Steve. I mean, that they're like, do people even understand what that is?
No, that's what I'm saying. And I'm beginning to wonder that if between this meeting and the June meeting, there might be a quick intra-meeting where they do something.
Well, if that's the case, Steve, then I would expect the dovish commentary where he's going to say that we are prepared to act based on the unfolding situation. That would be a great comment. But I don't think he's got the capability to go out on that limb.
Yes, but you could also say when Greenspan did it, he had a very monotone thought process when it came to how he was going to. At that point, he was raising rates, and then had a rate hike in the middle of the nothing. I mean, it was like a meeting out of nowhere, and he's had these hikes, right? And it just the markets went all over the place, right? If Powell says in this meeting says, "Hey, there are pieces of that we need to see that we haven't seen." Let's say, for example, maybe it's an unemployment number, right? That maybe out of the blue, oh wow, big numbers here, or oh wow, oil numbers, or oh wow, whatever he's going to say. We're going to look at those numbers, and I'm sure that Bloomberg's going to ask. I'm sure Wall Street Journal and those are going to ask, what numbers are you looking at? If those numbers come out of whack, or inflation, because I think you just saw the Atlanta GDP come out with their inflation numbers just a few seconds ago, it could change his philosophy and go, okay, we need to have a meeting. I could see this happening between now and November, an intermeeting meeting where they lower rates.
Yeah, I mean, how about between now and May? right? I mean, bring it
would
home.
It'd be concerning if he comes out today, says no cut, and then all of a sudden in April we do have a cut. That would really throw the markets into a tailspin because they would think the big bad R word, recession.
Right. So there you nail it. It's time for Powell to step into the fold and lead. That is what the world financial markets are looking for. We have zero leadership from our central banks. They all are hiding behind data dependent, and nobody wants to go out on a limb and try to lead. But
the ECB did. Christine Lagarde did. She cut, right?
She cut, yeah, but then she hid behind the data, and oh my goodness, if I had to count how many times she talked about our models, I'd be probably 10 at least.
Man, that's a shocker to me because, quite frankly, we look at these models, and of course, in the Fed situation, the dot plot model, I think, is what they really cling to. They call pearl clutching. They might have to release that dot plot to show us what they're thinking in the future, right? Okay, here's the dot plot. Here's what we've seen in the past, but that dot plot really hasn't been updated in a while, and they're still sticking to that dot plot.
Yep, and that's really the problem, Steve. I mean, let's look at here and now. You're in a tough spot, Mr. Powell, no doubt about it.
Yeah.
You have a wonky, comments coming out, and it is a very uncertain terrain. But more so, that's what we're looking for you to show us some leadership. And that's where I'm looking at the Bank of England coming up tomorrow, and I'm like, oh, this is going to be a joke here. Everything is telling me in the currency market that here we go. This dollar is starting to break here and ebb back to the upside because, when Germany took the foot off the brake and then the UK suddenly cut, people started clinging to, I've got too many dollars in that basket in the United States. I need to diversify. And we saw that outflow and we saw the dollar react. But everything is telling me, whether I look at NVIDIA stock, Apple, whether I look at the Dixie, the euro, the yen, everything has got bottoming formations here. So,
and let me. I just reached over to pull up the on the 7th of March. So that was about 11 days ago.
Yep.
What Powell had to say at the speech, he said, looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas. He says trade, immigration, fiscal policy, and regulation. He says it's the net effect of these policy changes that will matter for the economy and for the path of monetary policy. And he goes on to say, policy is not on a preset course. If the economy remains strong, but inflation does not continue to move sustainably towards 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly, saying our current policy stance is well positioned to deal with the risks and uncertainties. So if he deviates from any of that, from this next today at 1 o'clock, 2 o'clock, I think the market's going to go all over the haywire, right?
I agree. Yes, and I think he will deviate, but I think that the deviation is going to be on the dovish side. He has to reflect that change can bring a downside.
Okay, so he says 4 areas: trade, immigration, fiscal policy, and regulation. Which one is he going to really lean on?
Well, I think trade is going to be a big one because that could be the very disruptive one. If trade is not disruptive, well, budgetary restraint is a very big positive for him, right? No, if we can bring the deficits at least on a projected under control, that makes his job that much easier. So I think that what he is worried about is growth. And because he's been inflation, and suddenly we see some deterioration in the employment situation. I don't look at the headline. I look at U6. U6 captures everything. And U6 jumped up to what, 7-8%, was it? Yep. I mean, that was a substantial move up. So That's where I think he's focused. That's why I'm looking for a read between the lines, a dovishness, which I think ignites the corrective rally that we could see in the stock market here. It perhaps ignites the dollar index again. So
and I'm going to pull up the U6 number for everybody here. I'm going to share my screen. For those of you who don't understand what U6 is, I'm going to pull it up, and hopefully you can see that now. We look at different numbers for unemployment. A lot of times we look at the total unemployed as a percent of the civilian labor force. Okay, that's the official unemployment rate, so we call it U3. The U3 as of right now, February 2025, the latest numbers is 4.1%. But what Steve is talking about, and I agree with him, this is the number that we should be using, is called U6. That's the total unemployed numbers, plus all of those that have quit for whatever reason, marginally attached to the labor force, meaning that they're not quite fully employed and all that. That number is closer to 8%. And it's pretty high considering the same as about last year. Now, I look at this because this could be seasonal, 8.2 and 8.4, but we're not down much from that. So 8. So you're right, Steve. I think that, and I'll stop my screen here. I think you're right. I think that we need to be looking at that number because it is still pretty damn high.
That's right. And it moves sharply higher in the January read. So if you're looking for what's happening now, if you're going to be your data dependent, I'm going to hold him to his words. You're data dependent. Okay, well, that was a bad number.
That's right.
And if you get a second month of February in the same direction and look at the markets, I mean, I don't think February is going to show a marked improvement. Well, then, okay, what are you watching? Back to what you said, Steve. Mr. Powell, what are you watching? And I think that's why I think he's going to open up a slight dovish tone. If he comes out hawkish, I mean, where are the markets going to go? I mean, they're going to get hit hard.
Yeah. Yeah. I mean, I think everybody right now is preparing for a pretty even keel message. I was in the past looking at what color his tie was, whether it's blue or red or purple. I think it's going to be how many sweat beads are on his head, right? Just how nervous is the guy going to be?
I was going to ask you guys that. Are you looking for the pause? We know the pause used to be the Powell put. You know, when Steve Leishman asks the first tough question, because he's usually one of the guys that actually asks good questions, comes out. We've seen Powell do that. And then it's been like skyrocketing down, not skyrocketing up. So that's the only thing that I wanted to bring out here, guys. But leave it to you to kind of talk more about it.
I'm always concerned because when they are asking questions, it's never just a pointed one-time question. It's always multiple questions at once, and he has to think how he's going to say it because he already has the words in his head. Yeah. It's just how he ranges them because he's got to answer more than one question. So I understand the pause sometimes, but I don't know. So you tell me.
I think he's going to use the word uncertain. I think that is going to be the dovish inclination I'm looking for. He's going to acknowledge the uncertainty of the particular time we're in right now, which kind of everybody goes, yeah, I agree. You're right. But that could be hey, Steve, maybe that's the inter-meeting opening that you highlight there. But that's how I'm going to play today. I think that there's a lot of opportunity to trade. I mean, is that the dollar index you just called?
It is, sir. I wanted to bring that up and ask you, based upon that, where do we think we go here then based on that? If he's not going to talk up the king dollar, do we break back below that 103.40 that you talked about?
Yeah, I mean, right now, look at that double bottom right now you've got in place. And we're at 103.
I got a 4-hour chart. I think it shows it even better.
Yeah, we're at 103.67 right now, and you've got a double bottom below us here. 102.80 break, that's going to be significant, and that can open up a whole new move. I think that's the move, though. If there is a negative move post-Fed, I want to be able to sit and take advantage of that and counter trade that move.
Okay.
Because I think that a negative move in any of the markets is, I think, Steve, I heard you alluding earlier in your cast here today that, it's fools basically suddenly deciding that let me go into the move. Well, look at the move. The move's already happened.
Yeah.
You're flatlining against the bottom here.
Yeah.
So
said earlier,
Consolidating nicely. Yeah.
Yeah,
So-
that's what I said earlier, that, you know, if you're trying to chase the move here, the move's already happened already. So now we need to position ourselves for the new move. And I look, you know, Steve, I always say, it's one of my rules, that the market's about one thing, the path of least resistance, right?
Right.
And right now, the path of least resistance, I think, for the Dixie is to the upside, right?
I think so, Steve. And I'll tell you one thing that I'm following is when I see flatline moves like this, it's people that are very quietly trying to get back their position, clearly short the Dixie. Now, one of the big distinguishing parts of foreign exchange versus equities here is the ability, when you market movement can be so indicative of the big hands in the marketplace trying very quietly to unwind. And when I talk about unwinding, people take several billion-dollar positions in currencies in a short term, in a flyer, right? They think that the dollar is going down. They attack. And when they attack, the model sells, and if it's lower, they sell to 2 times more. And if the next price comes back negative again, they keep adding to the selling.
That's a great point. And you know what? You could be very, very close to the truth here, because if the world is starting to hate the United States because of all these tariffs and issues, are they going to have this attack on the Dixie?
Well, and then that's why I always look for levels. 102.80 was the point in mind that I've been talking about. 102.40 would be a decisive break. So if we're all negative, but Steve, haven't we been negative now for
We have been very negative.
And why isn't that chart breaking? You know, and that's my point. This is where technical trading, to me, is the best. Not so much where we're going, but where we've been. And I'm like, well, if all the people are saying the U.S. and they're pulling out of the market, well, why isn't it breaking lower? Right. Now, the longer we sit in a protracted sideways move, the more of the price pressure is unwound, and you could see that break lower. So I give a definitive level, 102.80. That's a point in a line right now that I cut all the way back. You can see how it matches up, and that would be a decisive break lower. But what's that going to take from here? Okay, reciprocal tariffs, April 1st. Maybe that could be it.
You know, when you look at it from the perspective of the presidency and the bully pulpit, you just really don't know what tweet's going to come out. You really don't know what's going to come out of his mouth, because he's not set on a course, right? He's got his ideas, but there's not a real plan in place. We know that, which is okay. I've said that quite a few times, that it's okay to not have a plan, but to understand the overall arching ideas of what he wants to accomplish, right? The art of the deal, shall we say. But I'm not hearing from the White House saying that this is the definitive how we're going to do something. It's put a tariff idea out there, pull a tariff idea back. Tariffs are going to be on, tariffs are coming off. He's using it as a trade policy that I don't always agree with. I mean, you're seeing Navarro talk about the trade policy. I don't even think Peter Navarro, our USTR, U.S. trade representative, I don't think the USTR even actually knows what the policy completely is. I mean, he talked about the other day that it will change over time. But that uncertainty, I think, is what's really causing the bigger mess, right? That we don't really know because the policy itself hasn't been set in place. Do you think that policy will get set in place over the next 3 to 6 months?
I do. I think it'll actually be on the shorter side of that 3 months. I think I think April, these reciprocal tariffs, I think, will be the ending point of this, and then we'll go into a period of negotiations, but they'll be very quick. And here's why I'm going to say that. I'll underscore why I'm looking forward and making that call. Because the UK is growing at 0. Europe is growing. Okay, forget about the numbers. They're growing at 0. Where is their growth in the world?
Right.
I mean, and nobody can sit there and say is it going to get worse? So my thought is everybody is going to want to renegotiate the position because we all want to get on this growth wagon.
So I guess I think you and I were saying is I'm bullish on the stock market. I'm not scared of this. If that's the case, if we see policy being cemented, then I think that companies can change their ability to make their growth. You're seeing that with NVIDIA and Apple and these tech companies are saying, you know what? I don't care what the tariff is. We'll work around it and we'll work with the president, right?
Steve, I couldn't agree more. As I've been saying, I believe May, June is where we begin to suddenly see the pieces now in place, which give us the ability to start that move back up. Meanwhile, Steve, right now, uncertainty creates volatility.
I like that. Uncertainty creates volatility. Well, let me leave it at that. Steve Flanagan, my friend for many years, Mr. Currency himself, JP Morgan, had the currency desk. Thank you for being part of Quasar Markets. Look forward to seeing you next week too, man.
See you Friday, guys.
Okay, well, we're going to bring in Peter Thomas, chairman of AU Secure, and the man when it comes to everything related to metals, commodities, gold. We got him here. Thank you for joining us, Peter. Let's get you two right to it.
Hey, Peter, how are you, man? I'm good, man. Listen, I believe you are the machine when it calls gold price over 3,000. You weren't kidding around. Look at this.
Well, I remember quite a while ago. I mean, in last year, you asked me, where's gold going? And I said 3,000. And you gave me a look like, uh-oh. Pete's gone and lost it now, right?
Well, when you hear prices of gold and silver and copper, and then we'll talk about that too, going through the roof pretty much, that's usually a sign of recession and people are getting scared, right?
Well, I mean, it is referred to as the safe harbor for equity. There's no question that owning commodities, but especially precious metals, is certainly where you want to be. It's been a good hold of value for the last 4,000 years. So why isn't it good now, which is the logic behind it? And we're seeing a lot of people climbing into gold. And what's interesting, Steve, is that this week, first time, people have normally been coming in going, how much is gold? Well, it's, 3,000. They're like, I'll buy silver. They buy the alternative. Now they're like, I don't want silver. I'll buy a tenth or I'll buy a quarter. So we're seeing people, they're just shaking off the 3,000 and just climbing in. And that's the first time.
Let me ask this question. You and I talked about this last time.
Sure.
At Costco, people were buying gold in a form. They were selling out at Costco for gold. I mean, I don't know. I don't normally buy gold at Costco, right?
Well, first off, there's a caveat to that. They're getting certain store credits and incentives on it. So people were, in effect, after enjoying the credits, were buying it below spot. So the person that delivers that gold to him has been a friend of mine for 30 years, and PAMP is a great company. So you're getting a high quality product at a discount. And think about it, everybody that bought it at the lows for that short term, they did real well. So, I mean, you can't scoff at somebody that makes a profit.
No, of course not. And after they sold out of Costco, we saw the new numbers this morning from Signet Jewelers up 12 and 13%. So are those customers now that can't buy gold at Costco now, they go into the jewelry stores to buy gold?
Well, not so much in America. That's more of an Indian type of tradition where they'll wear the gold. I saw when I was at the refinery recently in Cairo, I saw a lot of women buying gold for the same. They wear they instead of going to the bank, they wear it, But Americans aren't traditionally known as buyers of jewelry. They would rather buy the coin or buy the bar, Steve, as you pointed out.
Right. So let's talk about that for a second. You've been talking about this for I don't know how long, that the central banks are buying it. So the mothers in India and the mothers overseas are wearing their gold. But now It just seems that we know that the Russian banks are buying it, right? Talk to us about the central banks and their gold.
Sure.
The gold.
Well, I mean, it's interesting in that a metal, or let's just say a commodity, needs a base. I mean, going back to 2022, central banks bought a staggering $70 billion in gold. And they started getting aggressive in late 2023, 2024. We saw China lead the charge for 17 continuous months, buying anything between, I saw bids for 9 to 13 tons a month. So when you point out central banks, it's rightly so. They are the biggest player, and they've slowed down a little, but not much. I mean, last week, Poland came in about 4 tons. I mean, we're seeing new players, Azerbaijan coming in. We're seeing guys that we've never seen before buying quantity.
Yeah. And, it's interesting because we've heard about it for the last few months about how President Trump and Elon Musk are going to walk into Fort Knox, and they're going to start doing all kinds of numbers. They're going to find out how much gold's in Fort Knox, and we haven't heard a single thing about that in the last 3 weeks.
Well, I mean, it's been decades since anybody's done an audit. So, and I will tell you something, as having owned and had my own vaulting system for a number of years, it's a very complicated thing. It isn't just walking in and counting bars. I mean, it's very systematic. You're going to want to take periodic bars, throw them in the furnace, melt them down, see exactly what you have. A lot of people that I know that, hey, it's not pure gold. Some of it is, a little lower down on the carry. So we're going to have to see what the plan is put together, who's brought in, and how many years they plan on doing the total audit.
Yeah. And, it seems to me that when you're looking at, we just talked about with Steve Flanagan a few minutes ago, the policies and the questions around tariffs, that's a more of a higher level talk like you and I would have. But it seems to be trickling down to the regular consumer that they're getting nervous too, and they're buying gold. They want to know what's in Fort Knox. They want to know now what's going on with the ECB or Azerbaijan buying gold. If you could, and pun intended, melt it all down into one line and say, this is exactly why gold prices are going up, how would you melt that down into one line?
Well, I in one line, I don't think it can be done because it is a myriad of factors. First, remember, political tensions are a big contributor to metals. So we have to go the Ukraine. We have to look at Israel this week opening up 3 new fronts with aerial attacks, including bombing some key points in Lebanon. So we have, between the Ukraine and the Houthis have shut down 70% of the travel there, and insurance rates have gone through the moon. So we see the nervousness from the Middle East. We see a lot of people. I was sitting in on a deal the other day, and the guy said, all right, I'm going to settle it in euros. And the guy went, I don't want euros. And I was like, what? He goes, too much currency risk. And I was like, really? He goes, yeah, we're only taking dollars. So we're seeing nervousness about fiat at a higher level, and we're seeing political tensions at a higher level. And then, of course, we have a new president and new policies, and people with Trump, you never know whether he's just throwing it out to set up another deal or if the policy is in effect going to hold. So anytime you have uncertainty, Steve, like we have now, you're going to have higher prices. So that would be my one line.
So we asked Steve Flanagan earlier, look, and you hit the nail on the head, Peter, that it's uncertainty that's really got this markets all out of whack, right? Gold going up, markets coming down, Bitcoin all over the place. Right. What is it that you want to see to stabilize it? What things, we talked about it with Powell today. Will he stabilize it? Will these things you just mentioned, the Houthis, you mentioned Ukraine, do we need to see one little thing to stabilize this, or do we need to see a myriad of things?
Well, I think stabilizing is such a critical point you just touched on, Steve. The thing is that gold above 3,000 and holds that level, let's say it trades there for 3, 4, 6 months, whatever. And once it's stabilized and builds a base, then, we could see legging higher, but that's the bottom line, is stability. So the question becomes, are we going to take the war premium off? Will we see, Bibi come out and go, hey, we're not going to bomb anymore in the Middle East. Well, the hostages have all been freed. We're going to try to make nice. The Ukraine with Putin all of a sudden comes to an end. We have better a consecration of all of this. Then we will not see the stability. We will see gold pull back. Not even a question. Anytime peace breaks out, tension comes off, fine. And as you've noticed, and I know you watched the long-term bond, the 10-year has been drifting down a little bit, So
304, yeah. You just mentioned something that I'm going to probably put into a social media post.
Oh, excellent.
The war premium. All right. Yeah. So what is the war premium on gold right now?
$400 to $500 right now.
Woo! So you're saying that if war does not break out and everything's okay, the price will go down to $300 to $400. If war breaks out, $300 to $400 the upside, right?
Absolutely right. If you remember June, we were putting our customers, IRAs, IRAs, everybody was in gold with my price point of 3050. We almost tickled it. So we are at the point now where we're taking a lot of profits. We're taking stuff off the board and we're watching. Wait and watch is a position, which is uncertainty. And if we see the wars come back, then the market will break down, and then we'll consider where we're going to re-enter.
And you just said an interesting word. You said wars with an S.
It is. Yeah.
So is there a specific war that you're specifically watching, or is it all of them in general?
Well, no. Let's get real. Let's drill right down on that. And World War. Trump said it best. He said, "Look, we're looking at World War III. The Russians are very serious about people being on their borders, and we must face the reality that World War III has a greater potential than at any other time, and it will break out with Russia. So the idea of that settling in, that would be my number one, Steve.
All right, so you're saying let's watch Russia, and does that mean Ukraine, or does that mean Russia and Poland? Does that mean Russia and Europe?
No, I think Russia and Poland have always had their border difficulties, shall we say. But the thing is that the Ukraine is the issue. When Zelensky came in and blew up that deal, was very, very strange indeed. And he's now back in line, and hopefully we will have a come to Jesus moment with Zelensky.
I think there's more to Zelensky than we know right now. Yeah. Okay. All right. Let's get right to it. I'm gonna ask you. You have been so right for so long on the gold market. Sure. All right. Today is the 19th of March. Yep. 1st of April comes around. What are you thinking in gold from here, up or down?
Down. I think that Trump will succeed in getting war to break out everywhere. I would say we'll probably be about 2780 would be my first stop.
So there's your 300 to 400 premium. You said the war premium that you think that war won't break out, nothing's going to be, and everything's going to be fine, and gold will come back down. Is that right?
Yes, and I think something else that you've also tried to cover very well on your show, Steve, is tariffs. Yeah, and we get a chance to mention that. And you remember I said to you, we'll probably see tariffs on aluminum and steel, because we had a great deal of dumping in the United States from China on steel. So he indeed did put the tariffs on that. Copper, a little bit, not much, because it's an industrial metal. We're going to have to use it in a great deal of things. And all of the AI, everything runs on copper. So I think we're going to see copper, gold, silver, which is used in all of lead for making keyboards and whatnot. I don't think we'll see any tariffs on those on silver and gold, Steve.
Yeah, and you mentioned, you took the words out of my mouth. I was going to ask you next about Dr. Copper.
Sure.
Jensen Huang, CEO of NVDA, yesterday said that they need copper in their chipsets, right?
Oh, absolutely, and not a little bit, a lot. And the question becomes, how much is strand wire going to be? And we have enjoyed quite a rally in copper recently, making new highs, seeing it at the fives again. I haven't traded it there in a long time. The question becomes how much is available. I think the real trick, Steve, is to start watching the Chinese depositories. China's down 52% on receipts right now. So if they come in, remember, copper consumption was 63% of the market was controlled by China. So let's be very realistic here. Watch China, see what they start unloading. If they do, then I will be watching mine number 1 and mine number 2 in Chile. And if they start to see a lot of product, including solvents, going out, then we'll hold these levels and possibly even go higher.
Yeah, and right now copper futures now sitting here in the continuous contract spot now sitting at up 1.42% at 508.
Yeah, that's a big move.
That's a big move. And let me ask you, I mean, the forward contracts here, are we going to continue to be in contango, or are we going to see a little bit of backwardation here?
Well, contango occurs usually twice a year in that market. So first off, it's no surprise. Yeah. Secondly, the demand is if it takes 2 months of good solid demand to really put a dent in some of the reserves. So I think it's really tough to call the market, other than the fact that goes to my last point. Strength is made by consolidation. If it stays above the 5 area, and remember, a lot of people get confused. Let's get our viewers some facts here. The LME is 2.2, which is called a long ton, 2.2 thousand ounces, versus the short ton, which is traded in America. So you'll see a little discrepancy in price. So don't get confused between London and America. It's the contract size. So I just wanted to throw that out for our viewers. And the thing is that consumption could and probably will stay good. Something that hasn't been discussed at all is we lost 12,000 homes in California. Yeah. And what was the important thing was all of the above ground infrastructure, the heavy duty 4-inch to 6-inch cables that are running electricity are gone. Yeah. So they're going to have to rebuild the entire infrastructure, 400 pounds of copper to every home there. There's a lot of product going to be going into that reconstruction, just in that tiny spot in the world alone,
Yeah, and I'm looking at contango right now. For those of us out there that don't know, contango is where the spot is lower than the futures contracts. Backwardation is the opposite, where the price is lower in the future. And contango right now, we're seeing it at 508.80 right now, up 1.43% on copper. But in May of next year, we're seeing 525. That's a huge move in copper, right?
Well, it's a huge move because, Steve, the one thing that will dictate to you your contango is your carry cost. Yeah. And what carry cost is calculated by using the interest rate. How much is my money is going to cost going into next year? And if the Fed probably won't do anything, but it's hard to say. But if we see rates continue down, the contango is huge if you look out that way. So,
and what about storage? Is there issues with storage right now in copper?
No, warehouses are not at capacity. There is room for storage, so I don't think that will put a squeeze on the market.
Okay, that's good to know. All right, well, Peter Thomas, my friend for many, many years, Mr. Gold and Silver himself, and AU Secure. And listen, for those of you who don't know, you can actually buy gold and silver and platinum and rhodium all right from our platform here at Quasar Markets, right?
Right.
It's a great pass through. So, once again, Peter, thank you for joining the show, and
we'll
see you again, man.
I'm always happy to help out, and looking forward to our next show, Steve.
Thank you, guys. What a great interview. Peter, want to say congratulations, by the way, on your podcast. I know you guys just declared the #1 podcast in India for gold and silver. Is that correct?
Oh, you saw that? Oh, yeah. Okay. A million hits. That's not bad.
That's crazy.
my good friend at Gold and Silver News, who has been doing it for years. I'm a very, very hard worker, and I was fortunate enough to do a show with him. And the Indians, I do Dubai, Abu Dhabi, the Kingdom of Saudi Arabia, and I've just started dipped my toe into India recently on my international news, and people are starting to like what I'm saying.
Well, we're seeing a big move in India also for acquiring metals and a desire to do so. So it's great to see that. So congratulations.
Thank you so much.
Thank you again so much for joining us. We'll have you back soon to talk with Steve in a few weeks and tell us what else is going on. I also want to mention, as you know, I'm a big Bitcoin guy, and I don't think Steve mentioned it. You called it at 105 to move from Bitcoin into gold.
Oh, you remembered that, huh?
No, I did want to point that out. I did mention it to Steve. He kind of hid that one.
Yeah. Well, Howard, at 105, I came on for all of our viewers here at Bloomberg and CNBC and said, hey, guys, send your Bitcoin in. And we had a third party do that because we didn't want any problems with it. Right. And then they transferred. At 105, we were purchasing gold 28s, and so Bitcoin came down and gold went up. So the spread worked out real well for our viewers.
Absolutely. So again, everybody, you can find Peter at ausecure.com. Also, he is Goldbug111, I believe it is, on Twitter. Make sure you follow him because he gives you all these insights. Thanks again so much, Peter. We'll see you next time.
Always good to see you, Howard. Stay well, huh?
You too. Okay, everybody, I'm going to take us through here. We're going to go a little longer than normal. I do see Paul Frederick. You came in. You said, I see AA up 3%. We are burying all the power lines, and Florida AA, of course, is on the steel side. Let me get my screen and share it here. And AA, of course, has Alcoa here up about 3.18%. Aluminum definitely moving to the upside in general in the U.S. But Alcoa really the big winner because you can see CNX, which is another big player in the aluminum field, not seeing that move to the upside. Century Aluminum or KALU really up 0.5%. So like you said, you might have a little bit of the alpha insight there, Paul, but it is definitely moving to the upside here. Do want to talk a little bit. Tick has gone slightly negative, but as we can see, since we started here, Q's back up pretty level here. I mean, we've seen, if we look at the short-term chart here, we do see a bunch of volatility that shows up here, on a minute chart. But as we start to look more out and, zoom out a little bit here on the hourly chart, we can see there really hasn't been much movement on the Q's. Been a slight uptick here, but not really much. We are coming to what I do think is an important resistance zone at this 480.60. You can see I've marked already as a spot to keep an eye on as we approach that. The first time we did that earlier today, we got to 479.50. You can see we pulled back pretty quickly from that zone. So again, 480.60 is the area I'm watching here. We'll mention Bitcoin again, the same exact zone that I've been talking about for a while. Still the key resistance to keep an eye on. Excuse me there. I need to shut off my mic while I coughed. We've been in this ascending triangle. You can see we're going to need to break that 84,360 area and hold above that to give us the breakout to the upside. In general, though, when we break out of these ascending triangles, we do normally see a nice little move here to the upside. So I am watching that, and the first level I would be looking at there on any move to the upside would be that 87, 88 area. So we do have decent room to the upside here if we can get some mobility. I did also notice, I can pull up here. I did have up earlier the liquidation map I was watching on CoinGlass to get a little bit of a better view of what was going on. It will take a second for all of this to update here on me. And what I was looking at here was their liquidation. I think it's Model 3 that I like. Is it going to load for me is the question. Let's go with liquidation zone. There we go. Number 2 coming out. So this one's working. And what we can see here is you've got a big liquidation zone. If we can get anywhere up towards that 85,000 area, we've got about 17.67 million in liquidation leverage above it. That would push us up, like I said, towards that 87 zone. You can see there's not much yellow above us that way. On the downside, a little bit more on the way of liquidations to worry about here. Anything sort of below 82 and change is going to give us a bigger move down to this 81,000 level. So let's see if this other one pulls up because I do like it better. Let's see. That doesn't want to. Oh, there it goes. Here you go. So you can see it a little bit better. Like I said on this one here, any kind of move to 85 gives us a nice move up, would liquidate us up to the upside there and give us a nice room to the upside. So definitely like to see that. As we take a look here on Quasar markets, you can see the US dollar, King dollar is rising against all other currencies here. It's up a 0.5 percentage point versus the euro, up about 42 basis points versus the yen, 24 basis points versus the sterling, the Swiss franc, about 46 basis points, the Australian dollar, 44 basis points, and lastly, the loonie up about 18 percentage points on that, or excuse me, 18 basis points. When we take a look here in general, we do see across our S&P 500 index, mostly neutral to green so far. Big leaders in the technology sector so far are Apple plus 2%, NVIDIA up 1.46 cents percent. We see Microsoft, Google all to the upside, Amazon slightly up. When it comes to finance, it's a little bit more of a mixed bag here so far. And as I said earlier, health and technology, the one that seems to be losing. We can blow that up and see it. We can see so far Eli Lilly up about 1.81%, but J&J, Abbey, Gildan, Amgen, and others way to the downside here. I will say finance, we also see a mixed bag here. Berkshire Hathaway pretty much neutral. JP Morgan, American Express, Wells Fargo to the upside. Bank of America, Goldman Sachs, MicroStrategy, Morgan Stanley, and BlackRock fairly neutral too. And Blackstone up about 1.17% is if we look at finance. The other one looking kind of green here today too is, again, consumer services. McDonald's up about 87 basis points here. Disney up. BH or B-King, which is Booking, up 2.24%. Comcast slightly up. Airbnb up 1.16%. So nice move to the upside here by them. Marriott up 1.84%. The hotels seem to be getting a little bit of love here. Does seem that Bank of America's CEO, Brian Moynihan, being on earlier today talking about what was going on in the markets and what they were seeing on a bigger level of banking, does have the markets moving up here a little bit. Want to keep in mind here at 11 o'clock, we are going to have a new guest to the show, Kirk Spano, who is the founder of Blue Mound Asset Management, a registered investment advisor, is going to come on, talk a little bit about his business, what he does, how he's trading the markets these days, how he is advising his clients in light of, the changes with the new administration and all the volatility we're seeing here. As we take a look at market movers so far, biggest mover to the upside so far, XHLD up 86% here. Again, these are the penny pumpers. I'm not going to lie there. Another one up nicely here. LSE up 65% so far. Biggest decliners on the day, WCT down 41.77%. Most active by volume, not surprising, the Mag 7 leading the way, NVIDIA with 74 million shares traded so far today. Tesla at 35 million. We got SPY, Apple, and others in the mix there. And then most active by volume so far, BDTX, actually the most traded share today, BDTX. Let's take a look here. I don't know what that is offhand. Black Diamond Therapeutics. I am not familiar with this one at all. So, therapeutic company, again, they normally do average volume is 3.24 million shares a day. Right now, they've already traded 83 million shares so far. And it looks like the reasoning there is they have signed a global licensing deal for a new treatment to treat solid tumors here. So nice move up by Black Diamond Therapeutics, and the most volume so far on the S&P. So we'll keep an eye there. I do see he's entering the room here, so we will get him on. We have, again, the founder of Blue Mound Asset Management coming to the screen here. Kirk, how are you doing today?
I'm hanging in there. Can you hear me?
I can hear you fine.
The office that I'm doing laundry in.
Yeah, I love
put
it.
up a virtual background and it's not working.
Uh-oh. If you hit the settings, it should come on there.
That's okay. Yeah, I'm in a messy room. That's life.
That's okay. So, Kirk, thank you so much for joining Quasar. I know you've been a long-time friend of Mr. BigBeat himself, Stephen Orr. Tell us a little bit what you do over at Fundamental Trends.
All right. Well, I actually own an investment firm, that little boutique investment firm, managing 8 figures. The concepts that I follow are pretty simple. I just invest in the big secular trends. I started out as an energy and a technology analyst a long time ago, 30 years now, and became a quant before it was cool. Had a guy teach me Elliott Wave, and that seems to work sometimes. But I'm really looking for, 2 different things. I'm looking for stocks with huge asymmetric upside, and then I'm looking for the ones that I grind out where you can triple your money in 5 or 6 years. So it's a combination of catalysts in the big secular trends, and there's a process, which is big secular trends, analyze the government and Fed policies, which is important today, the fundamentals of industries and companies, and then finally technical and quantitative overlay. It seems to have worked. We've got about depends on what the volatility is on a given day, but we're at the edge of having 25 10 baggers since 2009.
That is amazing. That is absolutely amazing. Are you finding right now, are you trading any differently here with all of the tariff talk and the tweet analysis being almost as important as technical analysis these days?
So interestingly, yes. I think that the rise of the new retail traders is very similar to 1999, except magnified, right? It's bigger. And the communications are so much better now that the coordination, which if it were guys like us would be called manipulation, is off the charts. So I actually have an article that I'm going to release soon, titled Naked Shorts and Nefarious Underlords. And what's going on here, and if you troll the Discord rooms, it quickly becomes apparent to you what's happening is small hedge funds, maybe big hedge funds, but I know the small ones, they have their little monthly breakfasts or their lunches or their happy hours or their dinners where they share ideas. And so they take their positions and then they give their ideas to guys in chat rooms and trading rooms and Discord rooms, and they let those narratives grow. And they're clearly trying to manipulate the direction of stocks either up or down. And on micro
Are you trying to say they're trying to make Wall Street bets into their exit liquidity? I can't believe that someone like Ken Griffin would do that.
Right. I mean, I don't know if it's Ken Griffin. He has more legal ways.
He has a lot of other stuff to do, but I'm just joking. But
he can cheat by running the market with supercomputers.
Right.
But yeah, I am a definitely, I was raised in a way where you had to have a good bullshit detector, and I'm Sicilian, so you can understand that I think about words called skim. And I think there's a lot of skim in these markets, and I just think that you have to pay attention to the narratives to understand what the next narrative will be. Because you try to catch up to this narrative, it's usually too late, right? You can be if you can outgun everybody else, then fine. But we know that only 10% of the people get all the excess gains.
Right.
What you're really looking for is the next thing. So what's the next narrative that's going to come out? And I'm telling you, in a few hours, the narrative is going to shift, and it's going to be sell freaking everything. And I think that if you take a look at the charts, you take a look at Netflix, you take a look at Meta, you take a look at chart after chart after chart, they're going to all do what Tesla did. That I mean, maybe not to that extreme, maybe not 50%, but you're going to see 20 and 30% corrections. They're going to be elevator shafts, and I think it's going to be next 2, 3, 4 months. You're going to see a lot of blood. Then you'll probably get a really good rebound rally, and then the year will finish with blood. On the quantitative side, what supports that is that global M2 liquidity has been choppy for a few years now, since the Fed started tightening. And you got some of the international governments and central banks that have been loosening, but they're not as big as the Fed. So until the Fed is done with quantitative tightening, there's going to be problems. So you were able to pull this up. So people want to talk about, M2 is going up. I'm like, no, take a look at the last 2 years.
Out. Yeah.
It's kind of a straight line. And with the U.S. government, and I'm a macro guy. That's actually how I got into, that's how Rupert Murdoch's company, that little place called Wall Street Journal, hired me.
Yeah, just a little company.
Yeah. And I could tell you all kinds of things about that. And you can see the lotions back there. You can see the spray. My book list is actually pretty good. I got laundry to fold behind me. It is remarkable that people don't understand that liquidity is the number one, hands down, nothing else is close, driver of asset prices. So when liquidity is going up, asset prices tend to go up, and when liquidity is going down, asset prices tend to go down. If you show that chart, you can see that it looks like it's starting to inflect back to the downside, and that's probably because you're going to have a really hard time finding buyers for the U.S. debt this year and next year. So the idea that these trade wars are suddenly going to, rebalance things and get us through a transition, maybe in a year or two they do. I'm not going to make a comment because there are actually, I'm not a Trump guy, but there are definitely things that had to be fixed, right? I don't think anyone disagree with that. So in this particular era, we see the U.S. with the biggest debt refinancing we've ever had to do, over $6 trillion by the end of next year. And Janet Yellen was using the short-term debt because it didn't make sense to lock in the higher rates. Well, they're trying to get the 10-year rate down.
Yeah.
The only way you can do it is by having at least a recession scare. It doesn't necessarily have to be a recession, but it has to be a recession scare, and it has to last long enough that you can push some of this debt out to 5 and 10 years. You got Canada selling our debt suddenly as kind of a
right,
a Canuck FU. So you really, you're gonna have a hard time with this. So interest rates maybe don't go down the way they want them to. Maybe interest rates go up if they have a hard time placing all that debt.
Yeah,
well,
I mean, we've been tracking the 10-year here. We got down as low as 4.123 before the big tariff word got brought up. We can see it's pushing back to 4.3. Bassett said, that he's going to control that, not that, Jerome Powell. I don't know that he has the levers to make it happen. Like you said, the refinancing of our debt is only going to get worse, right? Fitch just gave us a downgrade. That isn't going to help, And as you mentioned, we're not making many fans throughout the world that necessarily want to bail us out, so to speak, and buy our debt.
No. So what's the only solution? There's only one solution.
Print more money.
That's right. We have to end quantitative tightening probably this year, And by next year, we probably have to do quantitative easing. I said that last year on the show that on that other on Stockholm Spaces. I wasn't sure if you want me to plug them or not, but and I got pushback. There's no way that we have a potential deep recession. No way that we, there's one particular guy. We're so far away from that, and blah blah blah. And I'm like, look, man, I've been a macro analyst a long time. I got people paying me a lot of money per hour to talk to me. I have a clue. Might not always be right, and my timelines might not always be perfect, but I got a clue. And I think that we probably have quantitative easing next year. So between now and then, you got to have an event, right? You got to have that crisis, and the crisis is going to be a debt crisis, and it probably, it's not 2008 all over again. It's going to be less than that, but it's going to be enough to trigger the next Fed chairman next May is going to probably do QE, and I'm certain that when Trump hires the next Fed chairman, they'll have that talk before he takes office, right?
Oh yeah, without a doubt there. And I think you just hit on a couple of key points. We've seen it. Number one, we've seen it from Jamie Dimon, right? He talked about it. He made it clear 2 years ago when everybody else was sort of ahead, calling for the big R word. He said, right now, people have a lot of money in their savings. They're at all-time highs, so we're okay. And then he came out like 4 months ago and said, guess what? Credit card debt now at all-time highs, bank accounts down at low levels. Now we're in trouble. And like you're saying, it was when nobody else was talking about it. I think that's the point. I did notice Bank of America's CEO was on today talking about how, they have about they're seeing a 6% spending level increase across their, bank accounts, debit holders and credit card holders. But my question is, where is it going? Because every earnings report we're seeing in general has had negative sales impact.
Yeah. So revenues really have kind of flattened out, right? So, the only thing they can do is increase margins by using AI. Well, if the executives, to save their bonuses, decide to start firing people by using AI, right? I mean, I think there's a crisis coming in that too. I think that, I did an interview with a Canadian, actually he's not Canadian, but he's based in Toronto, University of Toronto, who wrote an article called "The Singularity is Coming Sooner Than You Expect," something like that.
Yep.
And I believe that AI, depending on how we utilize it, can be a major positive for life, but the greedy people might have us use it the wrong way to start, and then we'll have to adjust. So I think the Europeans are actually on the right track here. We have to decide, are we going to keep jobs? Because do you really want idle hands? And the thing is that we really just got to push people back in the services, because we're short on healthcare. We're short on all sorts of things. We have to reposition. We got to match up the jobs, and the skills. Our education system is beat to shit. I don't know if that's allowed on this show.
Yeah, absolutely.
So, this transition, I don't think it's a 1 year thing. I think it's 5 or 10 years, and we're going to have to figure it out. We probably take our lumps. I do think that the fire investors, right, your SPY indexers, I think they're in trouble. I think that they're going to see
what we've called for.
I don't see them doubling their money in the next 5, 6, 7 years. I think maybe they're in the same place in 5, 6, 7 years. So
what are your thoughts too about the advent of the zero DTEs? I mean, last week was just insane with the amount of them on the SPY. And my concern is that the average investor is buying naked calls or puts when that isn't how they should be used.
Yeah, I wear this hat because I play poker. I play in the World Series of Poker, and I'm not good at it. I'm good enough to bring the money from the Milwaukee amateurs and give it to the Las Vegas.
I give it to the other pros. Okay.
Yeah. I'm a good enough amateur that I'm a courier. I'm a money donkey. So the gambling that's going on in the markets right now, and you can see it in all the betting markets that are out there now. I mean, hey, are interest rates going to go up by a quarter point or zero, or are they going to drop on a quarter point? I mean, there's people betting on all this stuff, and presidential elections, and will Kim Kardashian blow up the internet again this year? I mean, there's just so many stupid bets out there that it's a gambling mentality. Well, I've been going to casinos for 30 years. I have an uncle that worked at the Riviera for 35 years. He taught me how to play poker and gamble. And I'm going to tell you something. You can't beat the house.
No,
so,
they don't have those beautiful towers for no reason.
Yeah. I mean, you only have to bust out once to be busted, right? So you're going to see a lot of these gamblers just get blown up. And then they're going to point, it was their fault. It was their fault. They did it. They broke it. Nah, you were gambling, man. It's
right.
like
the market has no emotion, right? Is that we've put it, everyone thinks that this market has emotion and everything else, and they're there to break the little guy. They don't care.
Right.
It's like market makers making their money on spread.
Yeah. Well, and it's like going to the blackjack table. Oh, I can count these cards. I can figure it out. And, now they're using 6 shoes and they're only playing 6 to 5 on blackjack. And the dealer gets 21 4 times in a row as you're steaming it and building up your bet. And you lose 4 giant bets and you're like, oh, I'm out of money. I guess I have to go to the ATM. Oh, the ATM's empty today. Look, there's so much gambling out there that there is a comeuppance for a lot of people coming. And when it happens, they're going to point and they're going to scream and they're going to say it was somebody else's fault. It wasn't. It was their fault. I
mean, we stream about it here every day, all day. That's why we bring on so many professionals like yourself to talk to retail traders and say, listen, this is what you should be doing. This is how you should approach the market right now. This is why, the same thing, the perma bulls, right? Perma bulls are getting killed right now. Yep. They're buying every dip, and every type of move to the upside right now is sold off pretty quickly.
Yeah. I came into the year neutral to bearish, and I got berated for that 2 months ago. And it seems to be working out for me, right? Because I flipped from neutral to bearish. I bought puts on the S&P 500. I think I don't know what the market's even doing today. I've been on shows all day. But I think
it's up slightly. SPY's up about 62 basis points.
Yeah. So I've doubled my money on my puts, and I'm holding them because I think that after Powell today I think we get a pivot to the downside. I mean, I'd be shocked if he surprises us with a supportive message. I think he's going to say, look, inflation still needs work. Unemployment hasn't gone up enough for us to care. And, there's enough cash deals in the building space that, anything that we need for building houses has to come from Congress. I mean, he won't say it that way, but he did talk about.
Yeah, he'll hit that word uncertainty, right? And that's what spooks the market.
Yeah, and he talked about housing last time. He said, look, there's less activity, and that's probably because of us. He even said it. He said it out loud. My side hustle, because, everybody's got a side hustle. I happen to work with a private equity firm on the side as an advisor, and I raise money for them. And I'll tell you what, we've had projects on hold for a year and a half, almost 2 years now, because interest rates are too high. If you're not doing cash deals, you're not doing deals because you can't raise money from investors at a 12% internal rate of return. They look for 15 to 20. So until those interest rates, the 5-year note is what we care about. Until the 5-year note is in the 3s, like the middle 3s, you can't get a good enough internal rate of return to get investors. And, Kamala talked about giving people money to buy houses. It's actually the wrong solution. The right solution is have a tax credit to build houses.
Absolutely.
So we'll see. Trump maybe comes up with that one. I really think that you're going to see a heck of a shock to this market sometime this year. I don't know if it looks like 2022, where it just kind of drifts down here, or if it ends up being a correction, a rebound, and then a big correction like 2018. I don't know. I don't see 2008. I just think there's too much leftover money in the world from COVID. I worry about 2030-ish when we're at max boomers on Social Security and Medicare. I mean, Musk is right that we have to deal with that. But if you get rid of Medicare and Social Security, then you just have, 60% of the people impoverished for the last 30 years of their life. So you can't do it that way. You got to fix the systems, not break them. So, we'll see. The one charts that I've been giving people that I think that you should take a look at is, and you can pull up QClean, QCLN, or iClean, ICLN, or even PBW. All of these clean energy charts are just destroyed over the last 3 years, 2, 3, 4, 5, since the peak in 2021. So the last 3 years. And they're all bottoming. So when charts get this beat to heck, I think there's one question to ask: How will these companies all be out of business in 5 years, or will they have been rebounding? I think that all of these clean energy plays, if you buy the ETFs, it's probably the safest way to go. I think they'll beat the S&P 500 handily over the next 5 years. Handily, they'll crush the S&P 500 in the next 5 years. We have such, and this is how I got into the Wall Street Journal as an energy analyst. The demand for energy is going up. So we had flat energy demand for a decade. I don't think people really understand that. We had flat energy demand for a decade because efficiency offset offset everything, right? So now suddenly we have the AI data centers, which if you listened to Jensen yesterday,
I did.
Before, he's telling you, look, the demand for compute isn't going down anytime soon.
No, I mean, we're all going to have supercomputers, as he's pointed out. When Rubin Ultra comes out, you'll be able for $3,000 to run your own AI supercomputer. So I agree. Now, would you think that a big component of this too will be that surge in nuclear energy that we'll see also? It might change where it comes from, or you don't care?
That's so far out into the future. First of all, NIMBY will never die. Nobody wants, and they don't care if it's smaller. If it's next door to them, they don't want it.
Right.
And I don't really blame them. The most efficient energy out there is clearly solar on a cost basis. We already know that it's as cheap as coal during the day, and really even with batteries, it's as cheap as natural gas. The battery technology is getting so good so fast. And remember, AI is helping this because they figure out new chemistries, and there's a new architecture out there. People don't think about the architecture of batteries, but really just the way the battery is shaped was a big deal. A company called NVDA, it's a TJ Rogers company. I've been piling into that one. I think that stock's going to be a 5-bagger, maybe a 10-bagger from here. So
what was the ticker on that one?
ENVX. If anybody knows TJ Rogers, he's the guy that basically propelled Enphase.
Yep.
I think that this stock, people look at it.
Good looking bottoming right here. You can see. I mean, I have the weekly up. This goes back to 2022. The levels here. Yeah. You've got great support every time.
The fundamental story here is this: they created a new architecture for batteries that instead of a coiled lithium battery, it's more of chambers, and it decreases the potential for a burn or an explosion by like 98%. So suddenly you have batteries that don't burn, and they're 30 to 50% better than the existing batteries. Plus, they can incorporate new chemistry. So you got architecture and chemistry and batteries, and they figured out the architecture. They're in Malaysia, and they're in that new special industrial zone that Malaysia created a tax incentive, so they don't pay taxes, and they can license their technology out to the American companies to get around tariffs. So rather than building a plant here, they'll just go to Ford or GM or whoever and say, "Do you want to use our technology? Here, give us $500 a car, whatever." So this is a company that's going to see rapidly increasing revenues, low tax rates. Their CapEx isn't going to go through the roof because they don't have to build the plants. They'll just license out the technology.
Right.
Big deal. He has another company called Complete Solaria, CSLR. And they did something neat. You remember Sun Edison? Was it Sun Edison? Not Sun Edison. SunPower.
SunPower, yep.
SunPower went bankrupt, right?
Yep.
At one point, it was a $9 billion company. He bought it out of bankruptcy for like $45 million.
Oh, wow.
So this is the skeleton of SunPower trading at $100 million, and it's probably at least $1 billion company as soon as everything's running, and they're close. I think they're profitable next year. So they're going to be in the oligopoly of solar installers, and they're focusing on residential, commercial, which I think is the near term, residential long term, but commercial near term, and then some utility. If you take a look at where solar has been taken off, it really has been utility and commercial, because if you have a big flat building, why wouldn't you put solar on the top and not have to pay energy expenses for 10 hours a day?
Here in Ohio, we've seen a few of the places put their employee parking under solar panels.
Yeah, that's a big deal. That's happening anywhere. Yeah, it happens in Michigan and Wisconsin. If it happens in Michigan and Wisconsin, then for sure it's happening south.
It's happening in Ohio. That's how I feel. I'm like, if it's happening near Dayton, Ohio, it's happening everywhere.
Is that where you are?
Although I will say, well, I'm half in Dayton, Ohio, half in Washington, D.C., so I travel back and forth.
Okay.
So there's not much of that in DC because there's no room for it, and we don't have parking, above ground parking. But like you said, all the buildings have it. Although what does is National Stadium actually, on top of both of the garage buildings there, Lerner put solar. So
cool.
I'm with you. My last question for you, sort of staying on that, then, would be, what are you feeling about with the American car dealers who have sort of stepped back from their, push into EV over the last 6 months, 8 months?
Did you know that I was bullish on Ford, or did you just pull that up?
I just pulled it up because it's my favorite out of the car companies, personally, out of the U.S. base.
Then we're aligned on this one. So I think that Jim Farley is a better CEO than Elon Musk. And I know that the fanboys will hate me for that, but Farley's just a more stable dude, and they're just as smart as each other. Yeah. So here's the deal with Ford. When the tax incentives for EVs were there, and they're not technically gone yet, but you expect them to be gone with the reconciliation bill.
Right.
It made sense for them to dive into EVs. Well, Farley went over to China and saw what was really going on. The car that they're using, and it's not a hybrid. People say, oh, it's a hybrid. No, it's not a hybrid. A hybrid has two propulsion systems.
Right.
The new car that's coming, and it's the most popular car in China, is the extended range EV. I have already pitched it to Farley, at least via Twitter or via X. I've said, look, don't call it an EREV. That's too much to say. Call it an EVX. Extra range.
Yeah.
And so I told him that I like the Explorer size vehicle. So, if they use EVX, that's all I want as a car. The extended range EVs are what's coming. It's going to be the most popular thing out there.
BigBeat's on that too. He has one of the BMW versions of that already. Yeah. And not exactly that, but right. And he's a big fan there. I will tell you, have you been watching what's happening with these Chinese EVs, the new Li? I've been watching a lot of these demos lately. They're doing a great job. I think Tesla's got some problems coming up in Europe and in overseas.
Aren't their sales already down 75%?
Oh, huge. They can't go much lower, I guess. But I guess I don't see the bounce back because, man, I wish I could get that Li $60,000 EV that they just showed over the weekend that they announced.
I said this. So I've owned Tesla since 2015. Okay, I owned Tesla a long time. We made a lot of money on it. At the end of 2021, I told people, look, you need to go short Tesla. And they said I was out of my mind. Well, I've shorted Tesla twice now in the last couple of years. I've only taken part in this short a little bit, not much, because I just didn't know how irrational these people could be. But as it went down, I bought a couple puts. Here's the thing with Tesla, is that if every business they're in, they were in a number one, it's a $1 to $2 trillion company. Okay.
Right. Yeah.
They're not going to be number one in all those businesses. I don't even think they're going to be number one in cars. I think Ford is the one.
Yeah. I think space is the only one that they might, in Starlink right now.
But that's not Tesla. So, so you take a look at Ford at $10 a share and you go, okay, what's the deal there? Well, here's the deal. Great brand name, lots of loyal customers. You have the oldest car fleet in history right now that has to be replaced.
Absolutely.
There's going to be a cash for clunkers at some point when we have a recession. Somebody's going to do that. They're going to sell blowout numbers of cars at some point. You're really not going to see millions of immigrants get kicked out of the country. I mean, they're having a hard time catching the criminals. And the reality is we need that labor, right? We need that labor. So
I come from the restaurant world. You need that labor. No one else wants those jobs.
And construction, you need it everywhere. So we just need to find a way of giving out work visas that can become green cards, that can become citizenship over a 10-year period. If you stay out of trouble, pay your taxes and work. That's the way it's always been. And we just got to pick the number. Is it 2 million a year? Is it 3 million a year? Well, we have 3.5 million baby boomers retiring. So we need at least 3.5 million new workers every year, because the ones that were born here are just barely enough to keep up with the services and the educated jobs.
Absolutely. And they want to work less, not more.
And there's that. So, and the 4.5 day work week is for sure coming, if not the 3.5 day work week. I'm not really.
Yeah. I think we go to 4. I think we're going to be at 4 sooner than people realize too.
Yeah. I think people are going to take turns covering Friday.
Yeah, no, I'm with you. I fully believe that. Again, if you told me that 5 years ago, I would have said you're absolutely insane. But we just see it. They're just the generation younger than us, that they want it, and they're, where my generation just said, work more, work harder, and maybe we'll get out of there. I want it too now. I'm with them. I look at all the mistakes that we made. We stayed in the same job for 30 years. They jump jobs every 2 years, and they're making more money, and they're happier with what they're doing. And they've moved the labor market to where, they were in the driver's seat. Now it's sort of turned again a little bit there because of the economy, but that will always switch back.
Right. Hey, I spent 4 hours with the grandkids yesterday. I need a day off.
That will do it. I have a 4-year-old, so I'm the same way. I can.
You have a 4-year-old?
I do.
Oh, you're prolific.
Yeah. I started very late, and my wife is much younger, so
Okay.
All
right.
Yeah.
Well, good
I don't want to monopolize your time. I am so happy that you joined us. We're going to beg you to come back, because you've given so many great insights to retail traders here, to explain to them that you have to have your head on a swivel right now. As you mentioned, I do want to pull up the charts for 1 second to echo what you said. If you look at all of these charts, NVIDIA is the only one that's not exactly there right now when you look at the daily, but most of them are sitting right at an important, liquidity zone or, support. NVIDIA a little bit in the middle, but, you look at Apple, you look at Tesla, you look at a lot of these. If they break below these levels here, if you get a break below 209, look out below. You've got 197 easy. Microsoft's another one. A lot of these are just consolidating these lower levels, and everybody is expecting this upward move. To me, I'd be careful. If it breaks through 381.31, you've got a lot of downside in Microsoft. A lot of these are set up for either way explosive moves.
Do you have a minute to take a look at Netflix?
Absolutely. Got it right here for you.
So I think that Netflix, and if you do a 5-year chart of that, it just really, I think it jumps out at people. I think that Netflix can fall off a cliff here. And just to explain,
look at that chart. As a Bitcoin guy, that looks like Bitcoin, and we all know what happens eventually.
Right. So my channel checks are my clients. So my boutique firm, you have to interest me for me to become a client of mine. So a couple of my clients are pretty big in the entertainment industry. One, actually has a brother who's a writer at Netflix, but I've got a guy who's a producer, and another guy who's an entertainment and communications lawyer, a legit Philadelphia lawyer. And I talk about these companies a lot. So I understand the media industry. I've always followed it. Netflix last year did a documentary on how they're producing shows internationally.
Right.
And if you've listened to their last 2 conference calls, they've told you how hard it is to grow, because you have to put in so much CapEx for the entertainment. Netflix's growth numbers are going to be very challenged now that everybody's been flipped to paying for their own plan, right? Yeah. I think that Netflix can drop down to between 700 and 500 pretty easy. I think 500 is the worst case scenario, but I think 700 is almost, I think 700-ish is
It's funny you say that, because I was looking right at that sort of spot where it broke through, where it failed to break through, and then it finally consolidated and broke through here in September. And it's right there at like 695. So yeah. I see exactly what you're looking at. And I will tell you, I called it out on Schwab. The Tesla dropped the same way when everyone was buying up here at 420. I said, these were my target zones that have been there forever.
Yeah. My fundamental analysis of Tesla is that it's worth $140 to $165 a share. I don't know if we get there, and I don't know if we overshoot, But I think one side or the other of, say, 165 is where it bottoms, because I do think the other businesses have value. And I don't think Tesla goes away, but I don't think their volumes grow very much from here.
Right. And I think that they start to get judged as a car company, which they never have. And eventually that's going to happen as they see that across the globe, EV companies, they no longer have that huge lead and moat.
Right. The car company is worth $200 billion. So what is the taxis? Well, you got to remember, they're going to compete with Uber, who's going to buy that technology from Mobileye, and they're going to compete with Waymo, which is already there.
Yeah.
And even though you can say, well, this technology is better than that technology, the reality is that geofenced driving within cities, Waymo is going to be fine there. Now, do you want to drive a Waymo from downtown, pick a city, Milwaukee, out into farm country? Probably not, right? Because he's not going to know what to do when that cow walks into the road. But the reality is there's a lot of competition on that. The robotics. Yes, I think there's going to be a lot of robots in the future, but I think there's a lot of competitors. You got Siemens, you got all these other companies out there, Rockwell, and they're going to have robots too. I went to the Consumer Electronics Show in 2020, and I only go to shows when I think there's an inflection point. So I went to CES in 2020, right before COVID, and there were some robots there that looked a lot like what Tesla shows now. Do you know who owned them? A little company called Ford. They're sitting there walking around doing, hey, we're robots,
Yeah.
So, they're not going to dominate any of these businesses. They're just in a bunch of competitive businesses. The AI, if you go to Sandbox AQ, what you realize is that large language models are almost programmed at this point. The next phase is large quantitative models. So if you use Perplexity or something and you use the reasoning setting, the reasoning is the next step, right? That's going to be applying data. That's what it's going to develop into, large quantitative models. And that's why Huang Jensen said yesterday, look, it's the demand for compute is not going down because you're going to have 100 times more people using this stuff in the future than use it now, because it's just going to be in everything.
300 million programmers alone, as he mentioned, and he said, and already NVIDIA's 100% are being supported by AI. I've been talking to a bunch of friends. I actually went to school for programming back when it was COBOL, Fortran, and assembly language. So useless unless you work for the U.S. government nowadays. The only ones who are using COBOL. But they've all talked about how the use of AI that they all use to do it is, even if it's just to find the break in the code to then go back and fix it.
Right. So if you think about spreadsheeting or any type of computing that you were doing, and you say, okay, I can do all this myself using traditional computer programs and calculations, and it's going to take me all day. Or you can write a very good query for the reasoning model on Perplexity or whatever you're using and say, okay, now I'm going to go and turn on my coffee and then go to the bathroom, then go back and get my coffee. And now I'm going to come back and it's going to have an answer, right? So in those 2, 3, 4, 5 minutes, rather than you spending all day on it, you put in your query and it's going to give you maybe not the exact right answer you were looking for, but it's going to give you, okay, now I have to follow up this way. Or
absolutely. And it's going to prompt you to what maybe you do want to do next. Yeah. It's funny because you bring that up. As I was talking to one of these programmer friends who has kids getting ready to enter college, and he had been in the mindset of not letting them use AI very much. And I said, you're making a mistake. And his thing was, well, that's sort of cheating. I said, no, it's just like when we used calculators in the old days. No one wanted us to have calculators to do it. And here's what I mean. Learning what that query, how to do it, is what is of the utmost importance right now, right? I use AI all the time, and the people who have the best queries get the best results from the AI.
Yeah,
and
absolutely.
They're going to be the case. So it's just going to be a matter of, it's going to be different. So you're right. We no longer write a summary of whatever news event happens. We asked the correct query in the correct way and pointed to the correct databases that we wanted to act as a research assistant for us on, and it's going to give us that information. But the important part is going to be able to actually interact with it and to get the proper data out of it.
Yeah, I agree with you. I think what's coming is going to be mind-boggling to a lot of people.
Yeah, if I told you 20 years ago your phone would hold every song ever invented, what would you have said to me?
I would have said, "Wow."
Yeah, and it's free. And it's free. You would have said to me first, well, how much am I going to have to pay for this?
Right. Right. I still pay for Apple Music. I have to figure out how to download what I actually own.
There you go. Well, again, I thank you so much, Kirk. You brought so much great information to us. Thanks again, and we will get you back here soon.
All right. I'll fix my background too.
Awesome.
Take care.